Um, I'm gonna start recording this class now. All right. So thank you for joining me. Let's see which year. I believe Samsung Galaxy. I don't know who that is. Trader one, trader. That sounds like Bookie to me, or Humai. I'm not sure. Childhood friend Jalil, and then I've got Dina Consumer. I want to say good morning to everyone and thank you for joining in. This session that I'm doing is just to prepare the next six currency that I will be looking at going forward in the next 2 hours. So I'll quickly do all the markup and then I'll be able to pinpoint some exact trade location where I want to make decisions from in the next week. All right. I know. Thank you so much. I've got Buki has been a very important member of the family. He has been contributing not just by learning, he contributed to the team financially as well. So I want to use this medium to say thank you. To you. Really do appreciate it. These are the kind of things that just make me appreciate what we do over here and make me appreciate um, everyone that's joining in. You're welcome, Toby, as well. I can't believe a lot of people are up early. Um, right, so I'm done with this one now. The most important levels that I can see over here is when I'm seeing two levels lining up together like that. That alerts me that there are weekly traders, which are big traders, and daily traders aligning together in this resistance zone. So these key areas will be very key to me in making decisions. And then the numbers, the 1.4182 and then the 1.3931 are very important to me making trading decisions. So having done that, I'll speak through the other level. The one thing that I can see over here on weekly is I can see such an impulsive move, right? And that impulsive move kind of approach a significant area on this chart, on this weekly chart. So that area too is important, although we're not going to get there uh, anymore now, for now. So these areas of I now is very important on the weekly level. So to use this tool, we're gonna go to the horizontal ray, pick the horizontal ray, and then you can equally just place it on the eye that you are looking for. If you have the magnetic tool on, the magnetic tool will snap it to the exact price that you want it to snap it to. All right, so those are my significant levels, and these are the best levels that when price gets to there, that is, if you don't want to be dabbling in and out of the market, that's the level whereby you actually want to make a trading decision. Everything in the middle will not give you a better risk reward. This area here and this area here is where you get better risk reward. So I can see clearly that the moment we step down from here and then we have this corrective move that's impulsive and weekly, and this corrective move, we have the continuation that ends over there. All right. And then after this continuation, the most important thing to me is I want to see whether this continuation will lead into another correction, and that correction will give me continuation to the downside because this is the last move. But the key move is this impulsive move, correction, continuation. So when the continuation ends, you can then have another correction, okay, that will lead to a continuation. All right. But in this case, what you want to be paying attention to are the highs and lows. So once we start this impulsive move and we add this correction that leads to continuation on this weekly sell, what we can realize is this is the lower high that we are seeing. So eventually, what we don't want to see is we don't want to see price going above this high, right? When price starts to go above this high, it can start to lead to some kind of a trend change. Okay, that will be the first indication. So the moment we can trade above this high, then we are looking at the chart in a different manner that this might be a trend change, all right? And that trend change can then lead to continuation to the upside. So this is the first level whereby you can start to notice trend change. So that trend change occur on that. And then most importantly, you can use your trend line to identify as well, such that when this trend down is being broken, that is alerting you to price we start to look to the upside. So this right here now is no more a correction to a certain level. You will find a trend change at the back of this particular eye. All right, and I will quickly demonstrate that. I don't really want to teach now, but yeah, I'll quickly demonstrate that in this diagram. So when price is going down and is going down in a trend, all right, you can equally see that we are generating a high, a low, lower high, all right, lower low, price moves in waves, lower high, another lower low, another lower high, okay, and then lower low. If price decides to come up, right, and then start to trade above this high, okay, that is the beginning of trend change. That's the beginning of trend change. All right, and then in some cases you see price now coming back to use that high as a stepping stone to start to go up. Okay, and that is your trend changing. If I ask you where is your trend change direction, you'll be able to see that equally here. Thank you for joining in, Fabrice. Okay, so this key location now becomes an important location on the chart for a trend change. So over here, that's the trend change location, price trade above it, come back below it and give us what we call a market failure. Because if we want to see trend, this impulsive move continue down, obviously in this move down, we should be able to see price falling below here. But as we've had the first initial situation whereby price is able to come above this, all right, now, what we are anticipating on the longer term is possibility of that retracement that will give us a failure to make a new low. All right, so in this case, we got a failure to make a new low. We trade above it properly. We start using this area as an area of balance. We balance over there to start jumping up, balance coming back to that area, we start expanding. So price can find itself in a position whereby price like to contract, like stay in the same place or be in a range before it start to expand. So in this mode now, we are actually contracting to find the next expansion. But what we've seen is we've reached a key area, all right, and then price is now descending down in a corrective manner. This correction can then lead to another continuation to the upside, but we can then investigate that as we go. Okay, so what I'm seeing over here now is this particular trend change will be generating some kind of move, which I'll be paying attention to over there. So the most important target, if price is going to be falling, will be this particular trend line. That's most important key target. So on your weekly, you are able to identify where price is going to get into to start making a directional change. And the other thing in the kind of pattern that this is forming is we have all this I zone like that. And as you can see, when you have more or less like a confluence or areas whereby two important zones, the eyes of this, the eyes of that, whereby if you extrapolate it, yeah, I wouldn't know what will happen over here, but if you extrapolate it such that you're not having 2 points meeting each other, you are not the only one saying that point. The traders that have the knowledge of eyes and trading resistance are saying that point. A trader that's using channel is saying that point. So it's all about the amount of information that you can tie together and find the key trading location. So if you've known about this prior to the time, you know that you have a key zone, especially when you are picking the trades on a weekly, you know that you have a key zone in this area whereby you're looking for short, whereby you'll be looking for short. And when we identify or investigate what happened over here on the lower time frame, you'll be able to see the entry because over here is where you want to be making decisions. And the moment price starts to fall from there, you can see that in those key locations, you haven't actually seen price going back there. Price has moved down almost 790 something pips. If this price will continue to descend, the ultimate target is 1,500 pips. So the idea is to be able to identify this key location prior to the time it occurs so that you can be waiting for that particular swing down or swing trade in this location. In this place now, the only thing you can really do here is pure day trading. Your key swing zone is over here. So most important thing is to leave this alone. All right, so I've got a gentleman in the house that is literally pissed off for one particular reason. I don't know what happened, but probably, um, yeah, something happened to him, which we are not sure. Maybe delivered out of his COVID-19 situation, if that is the case. And one second. Yeah, hold on. If you're literally bored and you don't know what to do, I get it. Okay. But what I'm doing over here is I'm not playing. This can literally change your life. All you need to do is understand what it's saying. Once you start to understand the language, you'll be able to speak it. I didn't just come by this yesterday. It takes me 14 years and stay counting for me to be able to understand what the market is saying. All right, so that's the list of the issues. So I'm looking at this now on daily. Saying a scenario whereby at this side, when price got there, the first sign is that doji candle that allows us to possibility of um, we are tired. Not only we are tired, it allows us the possibility of directional change And when those kind of signals occur on a important zone, that is the signal to not look back and take your trade. All right. So the way that we've been following is we find price ascending up in a very volatile manner, and then we are seeing that descent. And that descent is not only just a descent, it's coming in an impulsive manner, right? That's more or less an impulsive sell-off with correction, further impulsive sell-off, correction, and continuous impulsive sell-off. The key to this now is to see whether those sellers are drying out or whether they are still in the market. If the sellers are drying out, then we can still see a move to the upside whereby we are getting 86 of that and then look for further continuation to the downside. Okay, so in this now, I'm trying to identify the pattern in which this is moving. So I'm going to be using this low as an example, and I'll find a second touch for it, which is right over there, and I'll extend that up in case the trend wants to continue to the upside, then it's not a problem. So if this decides to fall and fall down to this area, this is another key location, right, on the daily chart where I want to make a decision. It's all about where do I want to make a decision. The kind of decision that I'll be making over here, I'll be waiting for the price to show me whether we are going to be bouncing off the space the way that we bounced over it the first time, the second time, and then I know that the upward direction can then continue. All right, first touch, second touch, then extrapolate it to the upside. Okay, so going back, that is my trend line on daily. I want to get as close as possible to price using key location. So I still know that if this price is falling, it's got a it's got about 300 and some for up to 400 pips to get to that zone. I know that cannot happen in a day. It might take a couple of days, especially when price is ranging like this. So the key thing again is for me to now go down a little bit to my lower time frame, keeping in mind that the price is falling in an impulsive manner. Then I'll be investigating this. That is the actual impulsive move, correction, and the continuation. So over here now, I'm looking at some funny patterns of correction that's leading to continuation. And then now I saw a bit of an impulsive move, right? That giving us that correction, continuation, and that continuation continues give us more or less like supposed to be a correction, but that correction turns into an impulsive move downward, correction, and price continues to descend. So my 4-hour chart is giving me a clue that where we are going right now is to the downside as well. And on the 4-hour time frame, the only thing I can do is to understand that these are key location on the 4-hour. So if I want to be acting, right, the best area to act on 4-hour is to be looking to buy the lows, right, and then looking for possibility of whether price is going to get stuck near the high. We are still in a corrective mode down, and this is forming a key triangle. Until we break out of this key triangle, which technically I'm not going to be looking for price to break out of this triangle immediately. I'll be looking at this triangle to continue itself for some period of time, and I'll be using my GAN box to identify key location whereby that breakout can occur. So from the beginning, to the end of that triangle, I'll be looking at this area. I'll be looking at price coming between 618 and 75 for price to keep dragging down up and finally break up to the upside or break down to the downside on this. So I know for a fact if I want to see a breakout, I'll be expecting that key breakout between this area, which I'm going to highlight with
Brother,
red. Is that Mohammed? Right. So as price is descending, I'll still be expecting that descent to come to this area. And anything in this area is where I'll be looking for possible breakout. All right. So that's my card done. Um, the key, the key location now will be I'll be checking my 1 hour chart and I'm looking at this area where we have a couple of rejection before we break out impulsively. Price is coming back down there, impulsive correction in an impulsive manner, and then I can see another pattern coming down, a descending channel coming down in this 1 hour chart. So, and in the 1 hour chart for short-term trade, for short-term trade, I can see multiple triangles inside triangles. So where I'm going to finalize this is to just know that this little triangle over here is my 1 hour triangle and it's still a consolidation scenario. All right. So the 1 hour is showing me another triangle. But as you can see, the gradient is to the downside. So eventually the pressure will come through and possibly find itself down here. So the only possible trade on Cardian is the eventual break of this, and it's about 71p to this particular location if we have that eventual break. In this area now, again, because there's a key location over there, I'm not going to expect price to quickly break it down. Price always like to take decision and make decision and take decision and take time in this zone. So yeah, there's nothing major for me on card. The major will be if I can catch it from this swing all the way down here, or yeah, where it is right about now, we can be looking at possible pattern. And I'm very sure if Mohammed is in, let me see. I'm not sure if Mohammed is in. The key complex pattern that is looking to form will be possible harmonic pattern, which we're going to be tracking. And that harmonic pattern is a possible back pattern. Take out my magnetic tool sometimes. And then we'll be looking at it at 88.6. Almost as close to 88.6. And the one key part of this is this. 1 second, please. one single chart, you'll be seeing possible setup. And then the possible setup over here, 1 second. That's the complex setup of a bad pattern emerging. And a lot of traders are looking at this on the short term, but when I have my trend over there like that, I'm still seeing price coming all the way down, in an impulsive manner. And this key location over here will be an area of decision making going forward. Price may come down here, but most people are expecting it's going to be a reversal back to the upside. So you might be seeing a genuine buying impulse coming in here, and you'll be looking at this place for possible risk, which is about 22 pips. You'll be looking at this place for target of about 200 pips. If price decides to shoot up higher as well, but like I said, we are in a range and in a triangle. If price comes down, if you take a trade over here, right, you've got close to about 70 pips, what's it called, risk. So for me personally, I would like price to get to this area, see what price is gonna do, especially when we start to trade below the weekly and daily zone. I will still be expecting further continuation for price to come over here. So I'll be looking for that, for this harmonic pattern not to exactly hold over there, right? For price to come down a little bit, probably closer to here, and then hold and shoot back up. If not, I'll be looking for this last trend up, trend direction, that red trend line to possibly hold as well, when price starts to descend down. So in this key area, there are a couple of trade opportunity emerging from here, from that are key trade location to here. So inside this particular zone, there is trade opportunity occurring. There will be a lot of volatility um, move that can shift price bias, and that's what I'm saying on the dollar card drop by now. So I'll be looking at this area. If I want to take a risk of 71 pips, I may decide to stop my sell limit over here. But the place that I would love to put a sell limit if I'm not going to be in the market with this area, that's where I'll be looking to put a sell limit. So sorry, a buy limit will be in that area because that's the 4 hour possible rejection zone on the pattern, on that triangular pattern that we are seeing currently. So my most important trade, I'll be looking at 139.31. That is key zone over there. I want to buy limit over there to the upside. The risk is going to be about 71 pips if I'm not going to be in the market. My next zone will be somewhere down over here if we have a serious continuous flush, and it's possible because this started as an impulsive move correction, an impulsive move to the downside. We are just anticipating some buys coming in over here. In this area, another buy, and in this area, another buy. So if I don't want to miss any trade, I'll be having a buy limit over here. I'll be having a buy limit over here. I'll be having a buy limit over there. And always below down here. So if we start to fall out of here now, then I know that all my trading idea or my trading plan have now faltered, and then I should be looking for a new setup over here. But yeah, the key thing is to understand that this price is coming down impulsively. So, and that's where the power is. The real money now has shifted direction to the downside. Let's investigate down temporarily. Okay, so we call this sell-off correction, so impulsive move correction, and continuation is going to the downside on this 15 minutes as well. So the pattern emerging out of the 15 minutes, so you can see how we are descending down. 1 second, please. So the 15 minutes pattern is a short-term temporary pattern, and in this pattern, we can see how the wave is coming down impulsively. We break that particular kill zone, we traced back to it, and then obviously we start to see the correction to the downside. The only thing to put on this now is to start looking for possible key Fibonacci location. And if I'm gonna do that to find further trading opportunity, what I'm gonna be looking at is the beginning of the move. Initial, looking at the beginning of the move. Nish, it's been a long time. Thank you, Yonku. Thank you, Nish. Tech. Nice to see you guys out of the COVID-19 situation. Jay trying to come in as well. So, right. So the key thing now is we have this impulsive move. The correction gets back to 61.8. Right. We might be lucky to find that target of this move down at this 61.8 as well. And bear in mind, what do we have near there? We have a trend line from the bottom level, right? So, and then imagine what we have here again. So this line up here for the bat pattern is now becoming extremely possible that we might get down there, right, and then see that reversal to the upside, because this wave, so right now I am becoming extremely confident to be able to take a risk at 138.94 zone. That means we've come below 139.00 just a little bit. Psychological level, couple of important key points over there. 61.8 extension of this particular wave coming down, you know, and then obviously we can see a buying influx coming in here. And this is how to kind of see clarity as you continue to delve into the chart. So you have a particular move of 0 to 1, and then that's the second wave. You're looking at the third wave to actually come down to this area, all right? And then possible retracement of that wave to come back up, and we will look for the area where that will come back to, and then the fifth wave we then complete somewhere around there. So If I take my Fibonacci back to this area, say for example, if that's where we're going to end as a target, there's a target zone over there. Sorry, not here. I need the feed. So if we begin from there again, then we have this place as a target. So we might be looking for that retracement from 3 to 4 to possibly come down to 38. There is a possibility of a good possible 90 pips, 89 pips over here, and then the risk will be looking at further about 38 pips worth of risk as a technical stop, which is going to be below that weekly level. And then obviously if you want to have a mental stop, your mental stop have to be below here. All right, so with the way this is falling in this triangle, we have an opportunity to have a buy in that particular location, just short-term day trade, tallying everything together, short-term, tallying everything together. We've got a bad pot on technically. So technically now, irrespective of technically a box pattern formation. Yeah, I know, but the COVID is bringing you back in it. Life reality is bringing everyone's that's run away back. But yeah, it's
Yeah.
not. But it's good to relax a little bit, especially when things get clouded up, and then to look at it again. You know, nobody's a robot, so technically about pattern formation in the making, and then at the same time target confluence of 61.8, 161.8% extension at that 161.8 is coming in at 138.94 as a buy limit. And then we having possible target profit one at 138. If this is gonna respect 139.80, if this is gonna respect the Elliott wave, the fifth wave formation that we are seeing, which is a typical wave formation in that zone, and then the stop loss will be just below 138.55, and then a mental stop loss of about, let me see, 138.00. So if price rush down there, that's a mental stop loss. This target profit is giving us about 90 pips. It's high probability in the sense that the possible completion of the second wave will be over here. So it's high probability in that kind of sense. But yeah, you're gonna have to wait for the development. And what I would do is, if you have a demo account, you can stick that on your demo account. I'll be putting it on my live account as a possibility just right there. And the reason why is I have the extension of this move to end itself down there and then bounce back up to 38.2, which will be one key area for the wave 4 to 5 to begin. Let me see what wave 4 to 5 may possibly look like. So wave 4 to 5, yeah, it's possible to end over there. And this place right here now, if that is where the wave 5 ends, which is as expected, we have another buy opportunity on this 4-hour time frame that we're going to be looking to come all the way up here. So, and that's the dynamic behind this trade, like, and this wave 5 can give us a complete reversal out of this triangle. And then you don't want to miss the buying opportunity that wave 5 will generate somewhere around there as well. Because that trade right there will be a key trade of about 224 pips, and the risk will be minimal, or else we broke out here. This is quite clear that the risk is going to be minimal over here, considering the way price has been coming down to this particular location. All right, so those are the two trading opportunities that I can see coming up in the in dollar card going forward. And then I'm gonna be putting that on my own account. You can copy it down and put it on your demo account. This is just for educational purpose, and then you have to use the proper risk management. The reason why I like to demonstrate it like this is even for newbies, you wouldn't have to find it challenging um, to take a trade. Give me a second, please. So if that got activated, I don't have to look into my, I don't have to be there to take advantage of all this. Okay. So my trade that I'm looking at now is a buy opportunity at 39, 38.94. Eight nine four, and I'm looking at the stop loss at 3800, say for example, and my target profit is 39.80. Okay, so I'm looking at 38.55. This is almost 2 to 1 risk reward. It's not one of the best ones, but there's a possibility of that. And then yeah, so I have my key trade location in, probably I should make this and put it in the chat room. Okay, move forward. That's my trade ticket. Number one. And then going forward, number two will be that trade somewhere around there, around this trend line, 38.12. So in this case, I'm not going to be looking at 38.12 exactly. I know 3800 is within reach. Sometimes price likes to go to 3800, which is the psychological level, and then give us that particular trade opportunity. So I want another buy limit. That's the 8.12. I'll add about 5 pips to that, which is 38.17. And my stop loss in this case, allow my stop loss to be 37.55. Just give it a little bit of room. And my target, I'll be looking at that target of 140.39. 140.39. I don't want to exactly ask 39. I'll take about 6 out of that, 140.33. Okay, so that's about 4 to 1 risk reward. That's about 4 to 1 is reward. So even if you have a small account, this should be encouraging enough for you to start trying. I mean, you don't have to look at this skill as something that you're going to have for the next 30, 40, 50 years. So there's no need to rush. Good morning. So, yeah, those are the trading opportunities I can see on dollar card for now, and they are hints in the market. So, I'm not sure if I complete this one. Let me see again. 755. Yeah, I don't think I'm modified. 755. This profit at 140. I'm at entry as well. My entry in this case, I was looking at the low over here, 138.12, and I said I'm going to take 17. 138.17. So I got two bargains in the market, and that's what I'll be looking at. So for me now,
Hello?
yeah, go on.
I don't like to
Sorry,
do now.
I just want to clean up this chart now. I know that I have a clean chart. All the analysis is done. We are looking at a 4 week, I mean a 5 week pattern, and yeah, so that's dollar card done for me. I will then look at the next pair. The key trade on that dollar card chart, let's say, was that 4 hour pattern of triangle that we're seeing. That's a key trade. I'm expecting that, yeah, for the people who are just joining us, I believe you'll be able to see it on as we're coming down and we're bouncing off and we're coming down and we're bouncing off, we're coming back down there, we are bouncing off. We are still expecting possibility of a break. If we see this break, we can see the break coming to 46 above, and that can give us, I'll be watching this carefully, that can give us other 600 pips back to this area. So the key is to watch this deep break over here, and we can break down. Let's see 4 hour chart. we manage to break down, we are looking at continuous 300 pips to that zone. So those are the key traits to watch out for. Breakout of this particular triangle to the downside, right? If we break out to this downside, there's another key trade location over here, which we found from this low to come down here and then ultimate bounce we'll be looking for with the bounce of this trend line back to the upside as well. So yeah, but because we are inside this triangle, that's where we're going to be acting for now. And that's where the magic can happen. Break down to the downside or break up to the upside. Those are the two key trades for a swing that we are looking for. All right, so let's look at what's going on dollar yen. Okay, so I've got dragons going on here. Let me delete everything and look at key structure of the market. So if you just join in and you didn't need the first analysis, this will be good for you. You can see impulsively is that correction, that continuation to the downside, new impulsive move to the upside, correction, impulsive, correction, impulsive, correction. And then that correction failed over there, and then impulsive move to the downside. The key now, the key is to be key is to be looking at this, that is this going to be an impulsive move that will give us the continuation to the upside. All right. And how do we determine that? When you're looking at this particular structure, impulsive move, that monthly correction, and then continuation to the downside, there's a pattern at this bottom, which you might not be able to see. It's a reversal pattern. It's a reversal pattern. And that reversal pattern is what gives us this impulsive move. And we have a massive, massive correction going on the dollar yen. So we will be able to look at that clearly as we go forward. But if we take this important area, there's nothing that can beat that. And look at this like this. We might be in a massive, massive triangle, right? And the key locations in this area now will be this side and this low, and your best trades are going to be from this area. Your best trades are going to be from this area. Okay, one particular reason. Let me close this first of all and try to open it. Right. So those are the key locations for the best trade, to be selling when price gets here and to be buying when price gets there on monthly. But as we are now, we are well away from it, so we have to find a way to get our our trading idea closer to where price is. Okay, so I can see, like I said, it's looking like a massive correction. I want to look at possible trade location. So my highs of monthly, I need this for Confluence. Therefore, when I glance onto the chart, I'll be able to read direction. If I'm on a smaller time frame, I'll be able to read direction. All I need is to know where the impulsive move is going, and I'll show you. Once the price is below some key levels, I know that, okay, I want to be a seller. If the price comes back above it, I know that I want to be a buyer. Wow, I haven't seen winning in a very long time. Thank you for joining me, Winnie. How have you been? How's your husband and the family? I hope everyone is doing great. Can you all hear me though? If you can hear me, please type 111 in the chat room.
Hi.
Good. So the highs and lows of great. This high over here, whoever sell this high over here, make the most money. So I know definitely someone is there. Whoever buy this low over here, make the most money, sell that, make the most money. So I'm trying to identify key locations whereby traders are hiding. That when I get to my smaller time frame, I know in those key locations, those traders will be looking to defend their position. So what we've seen um, over the last couple days or weeks is this V-shaped recovery, right? That end itself somewhere over there, and then we have this impulsive move, slightly that gives us that correction, and then we're looking for continuation, but we are using this base now as an area where we're holding, and this is giving us another type of correctional move, all right? And then obviously we might be seeing continuation to the downside, but for now, that is going to be difficult because this correctional move is giving us some kind of pattern. I told you that's a double bottom, all right? So this is a reversal pattern in the nature. Despite the fact that we've seen this impulsive move, we've seen correction, continuation is giving us an impulsive, sorry, continuation is giving us a double bottom pattern. So that's where we are currently on daily. All right, so what we then need now is how to tally all this together and make an informed trading decision. Like I said, the best possible place to take a trade is the location above there and below there. That will be key location for us in the future, but currently we are not there. So we just want to see if anything is setting up nicely on this particular dollar yen opportunity. So if price continues to bounce back up, considering we have this low, we have a higher low, and then we come back, we have another low here which is higher than that. All right, and then we are testing this for the second time on daily. Exactly. I talked about the different names that they are called. So for your correction, you don't correction on my last class. They are correction, they are range, they are equilibrium, they are retracement, they are pullbacks, and consolidation. So the key is to confuse every newbie into, okay, so what is this, what is that? But they are all the same thing. Oops, Ctrl Z again. I hope that answered your question. That's so good. All right, so going forward, the key area to enter trade now again, after those highs that I mentioned are this. All right, so you talked about inverted head and shoulder day, man. The key to that is technically doesn't really matter where you see your head and shoulder anyway, but technically what you go, if you are looking at inverted head and shoulder, you want to be looking at inverted head and shoulder in a downtrend. So this is where you want to be looking at. You want to identify the trend and then look for an inverted head and shoulder in a downtrend because that's a reversal pattern. All right. So I will try and have a look at that inverted head and shoulder that you're talking about. It might be one. So that's what you are looking at. As in fact, the shoulder, the left shoulder, the head, and the right shoulder. So if you are looking at this as an inverted head and shoulder, if this is what you are seeing, if you're seeing this as the head and you're seeing this as the shoulder, right? With that means the trend has to be a downtrend, a clear downtrend. Okay, the trend has to be a clear down. Which in a way, oh, give me a link now. Go back to the how to. Let me do in a way, this trend might not be a very clear trend. This is, you can look at it and say this is a downtrend because of the gradient at which this is coming, you know. But most inverted head and shoulder, yeah, the trend will have to be coming most probably from here, coming down like that. you know. And in this case, to be honest, it looks like it to me. I won't tell no lie. But you have to now consider the low part. Look at this low part. Is way lower over here than that. Meanwhile, the head of the inverted head and shoulder should be that particular last low. Should be that particular last low. This is more or less like a V-shaped recovery, more than inverted head and shoulder. But you can still use the concept of inverted head and shoulder to trade this. But technically, it's not an inverted head and shoulder because we still have another low over here in the same triangle that is lower than that. But yeah, if you want to look at it from the overall trend, maybe we can, but it's still the same, more or less like the same concept. It might not just be the same name. So this V-shaped recovery, do you want to call this the, you might want to call this the left shoulder, see this as the head, and this as the right shoulder, and believe the trend is coming down like that. It's a complex scenario just because of the situation that we are having in the world lately. And yeah, so it can perform the same function as that. Meanwhile, the neckline will be this blue area on monthly. We break that to the upside. We are happy to continue to go back up. But before we get there, there will be some couple of few decisions that need to be made over here. And that's what we are looking at. That if this is a correction, if this is an impulsive move, do we have a correction? Are we seeing a correction? And if this is a correction, what are we actually seeing? This particular correction is showing us that we've reached a double bottom. So now what is essential for everybody is to understand pattern separation in much more smaller time frame. We've seen a triangular pattern in this big chart on the monthly, okay? But we have to now delve everything down to separating the pattern into a much more smaller time frame, which is why we find ourselves on the daily, This can be an impulsive move in the daily, and then in the monthly, it's looking like a correction, you know. So, and it can be the same. So we need to separate the pattern in the dailies to the smaller time frame to actually see where the money flow is actually going. Initially, the money flow was rising up, and when we get to this area, we encounter that setback. So does it mean this money flow, which looks so impulsive, will now give us quite a lot of correction that we continue to go down because there's an impulsive move over here, whether anyone likes it or not, or are we now going to be seeing this impulsive move has ended its own um, function, and then we are seeing directional change, you know. And more than so, like I said, we have a technical double bottom over here. That's a technical reversal pattern that can give us this W shape recovery to the upside. So that's where we are right now. So what we need to do is to find key areas where price is definitely respecting on this daily chart. We might be looking at this first touch and second touch over there, which is clearly visible at those eyes. And obviously, because this is a daily chart, and then we might be looking at this low as a key area as well. Um, so where we are playing on daily, it's clearly visible that if we possibly get back to this area, right, we might be having one of the best shots of our life or a break above. And we will be favoring the short because look at this. This is a high, this is a lower high. This going up here will be giving us a third lower high. possibly, you know. And once we start to see daily rejection in this zone, then obviously it's a reason to take a shot. This is the basal low for now. So everything that we want to be doing, we can see it clearly, even despite the fact that we are in a monthly time frame, we can see 370 something pips clearly in this particular range now. So now tying it together to find a trade location is the next thing that we need to do. Um, Let me delete this, gentlemen. So now, those are the key things I saw on the daily. Let's see what goes on the 4 hour now. So over here, that is the impulsive move. Okay, I was talking about um, um, there was a pattern somewhere. Let me go back to weekly, or is it on daily? Let's see. Yeah, so after the sell-off, there was a particular pattern emerging over here, right? That pattern, we need to investigate the kind of correction that goes on here that gives us this move. And that's what I'm looking at on the 4 hour chart to see whether this impulsive move down has actually corrected, all right? So once we have this sell-off, what we can see is this tree, almost a tree drive pattern, but it's not a tree drive pattern. Okay, so we sell off correct, right, in an A, B to C, A to B, C to D formation, and we come all the way down, you know, and then we break out. We actually break out of this correctional pattern such that after breaking out, this comes out impulsively, okay, and then we start to see this kind of descending channel, which can be leading to another correctional uh, pattern. It's a descending channel, and look at where we stop at the I location. We respect we bounce off in all places over here, right? And then we got to here as well. The same trend is what we are following and bouncing off over there. And as you can see so clearly, we come up a little bit impulsive, we correct, we're going impulsive again, we correct, much more deeper correction, and then we find a double top over here as well. We find a double top over here as well. Hello, Jumai. Thanks for joining in. Is your day today? I know you still have an assignment which you haven't submitted, so please do it. All right. So in this area now, what we can see clearly is welcome. What we can see clearly is we've broken out of a correctional cycle of this impulsive move, and that is what is clear to me. This impulsive move give us this correction, and we've broken out of it, and we are in another scenario now. And the breakout of it created this particular double bottom. How this double bottom will now emerge to continue to the upside is what we are trying to investigate. Whether that's what we're going to see or not is key in this chart now. So breaking it down, I still believe when you look at this and you look at that, so first touch, second touch, what price is still trying to do is get to this area. But look at it, we have another double top on that 4-hour chart. So each and every time we try to go up, it's either we encounter a reversal pattern, a double top. In this smaller time frame is a reversal pattern. First touch, second touch, sell off, sell off. But we have not actually come to this low, which we now complete that double top pattern, because this is an inflection point. This little point over here is an inflection point for this double pattern completion. All right, so what we will then do again is look at things like this, from this low to that low, and extrapolate it to the upside. Sorry, let me delete that. Select the arrow tool. I'm in a work mode. Okay, so we can see clearly what we're doing now, that price is bouncing off key area. So this key area is what is closer to price at this point in time on this 4-hour chart. All right, so what does that really translate to? We can't go anywhere up until we break out of this zone. So even if price continues to come up, we still have this zone that will be disturbing price, and we can't go anywhere down until we break down out of here. So as you can see clearly, you can look at this dollar yen trade and say to yourself that, all right, so I'm coming from here. Most probably when I get here, I'll encounter another challenge, which is going to be the third touch. All right. If I encounter that challenge, then I'm going to come down back to this area. The first, the second, the third. That's what we are expecting. Okay. And then it's not really clear until I break out. Either I break out to the downside, or I still use this area as a stop and then break out to the upside. Then that break is what is the key trade for us. We need to actually break out of this funny cycle where we are, all right, on the dollar yen, for us to have any trade that is looking promising. Okay, so if we look at the 1-hour chart now, now you can tell me clearly this is an impulsive move, right? That's where the money was flowing to. Correction, impulsive move, and then correction. And you can see clearly the kind of double top that we managed to form. All right, impulsive move, correction, and then impulse to the downside. No problems. Get it charged. Well, DXY, which is the dollar index, everything is still flowing in the direction of the dollar at the same time. When you look at the chart that we have over here, the one thing that's clear on this, that we deduce clearly on this dollar card, is the dollar is going down, okay? And then we are saying it's not just going down, but it's going down in a particular triangle. And we've noted the key area. So if I look at the DXY right about now, that is still going to be going down. So my gentleman over here is going down, but is going down on a gradient. Each and every pair have different relationship to the dollar. Some are extremely weak against the dollar, and some are extremely strong against the dollar, and some are mildly weak, and some are mildly strong, because they are different economies. So even if dollar choose to be going in one particular direction, we have to understand that just because we are in different economic zones, our currency might have different strength according against the dollar. So after this impulsive move, the one eye is now making it clear that we have another little double top formation around this area, and then price is looking like this a correction that wants to give us the continuation to the downside at the back of this impulsive move. Now we've seen that double top, we've seen this um, touch over here, which is lower high. We've come down impulsively. We've seen another one, So this trend line down there is looking possibly breachable because the last money flow that we are seeing from the institution is actually pressing this down. But each and every time we got there, that's where we find energy to push back up higher. And that's exactly what I'm saying, that until we start to see the break of this trend line, we cannot, one second, please, we cannot make an informed decision until this breaks down. So that's our challenge over there. For this to continue to go, because we've touched it so many times, one, two, those are the areas where we are using for key level of bounce. We can't get here or get here until that level breaks. Okay, and yeah, although we came down impulsively, we start to build our correction over there. It looks like we're coming back down here rather now, and that's where we might be looking to encounter the break. Let's see how we are now behaving inside this place. So the dollar yen price is trapped in a consistent looking like an uptrend, but in a triangle at the same time. We need a breakout of this zone. Thank you for joining Invest. Okay, so the key thing now is let's have a bit of measure in place from that high to this particular low. Are we respecting anything? So we came all the way down, we retraced, we couldn't get to the 50, we easily trade above the 30, couldn't stay strongly above it, and what we can see is we break it down, okay, and then we are using the 38.2 as that short location. And if you're using 38.2 as an area of short at the back of this double top, like basically this is looking like an head and shoulder pattern that you're talking about, but this is an head and shoulder pattern, impossible uptrend. If this is an uptrend to us because of this trend line, we might be having a break of this neckline very soon, especially when we've bounced off that at 8.2. This another short-term retracement that can be giving us possible sell-off, but this is key to us. And then break down below it is giving us areas down to the delay. The dollar yen is a typical leave me alone situation until we get that possible break. So it's just something that one needs to be watching out for. But I want to quickly count some waves that we are seeing inside here as well, because behaving so wavy. So short termly, there's no anything swinging over here for now. More than we are seeing a triangle. Okay? So in a triangle, it's a consolidation pattern. All right, we're seeing some kind of an ascending triangle. It's a consolidation pattern that needs breaking. This particular triangle might break anytime, but just now, because it's so clear to me now that we are looking at this type of a triangle, which is an ascending triangle right now. At the back of this last impulsive move, we start to gradually form this ascending triangle. We are maintaining the same top, you know. So this is becoming that huge level of possible rejection level, and this is a huge rejection level. So as you can see clearly, we need to break out this consolidation for us to be able to enjoy anything on the dollar yen properly. So there's no need to rush a trade in this. Yeah, giving us a short term. There's no need to just 30 pips, 20 pips. That's not gonna give us a good pip enough for a swing trade. So one key area that I can see is this area here, that sell off below it, and then we are hanging on until, let's blow it up a bit. If we go to 15 minutes, right? So we have this particular impulsive move, we have that correction. That correction give us this particular sell-off right here. Okay, thank you for joining in, everyone. Sorry, can you read feed level? You can see where you open. Okay. 1 second, please. All right, thank you for joining in, everyone. So zooming down to the 15 minutes now is giving us some latest perspective in price. Okay, if I should look at this, what board is giving me? Oh, so, okay, take out the magnet. I want to look at this, trying to box in the price in the direction in which it's going. Such that you know when to change direction. So if I should look at this 15-minute chart, the direction that we are currently going is that impulsive, that correction, that impulsive. This is looking like a correction on a bigger level as well. Just the way that we've seen the same thing over here, that double top sell-off. We've seen all that double top. We are looking for that particular sell-off, although the gradient is still there. So we are looking at this eye. And this eye, the good thing about it that I'm trying to show you is it corresponds to a particular zone. Okay. This eye corresponds. I'm gonna go back to that feed again, don't worry. So the fib was from this eye to that particular low, the current swing. All right. So looking at that current swing, where the challenges for this chart is this. I want to see who will be able to get this right. Let me take out the feed in a way. So we bounce off that at 8.2, we sell off, right? And where are we just now? Where are we? What are we rejecting? Let me blow it up a bit so that you can see where we are going. Can you see 107.65? 107.65. What is 107.65? And it's simple. The premise is just simple. Once you, can anybody tell me what 107.65 is? So there's no magic anywhere here now. What is 107.65? And why do we stop there? So the most low risk trade that we can get, right, is at that 107.65 sell off. Okay, that 107.65 sell off is ending itself at 107.51. Okay, so if we choose to stay above 107.51, if we find rejection above 107.51, we are not going anywhere down, because this 107.65 area is a monthly high or low area. This 107.51 area is the previous monthly high or low area as well. So if you're above one monthly high or low area, price will tend to stay above it. Okay. The moment you sell off and you start to go below it, price will stay below it. So look at this impulsive sell off. All right. And that is the key. The key is you want to find that impulse, that impulsive sell off. All right. Give us a couple of challenges above the 107.51, which is a previous monthly high and low area, right? Price is finding it so challenging to go above it at first. Eventually, when we break above it, the next target is 107.65. All right. Why is it not a bit higher or stay below lower? Then we sell off again. Okay. Maintaining the same area of 107.51, we trade into it. 1 second. So our next target now is if we fail to break below, there's a low risk trade over here, right? The moment we break below this trend line, obviously we break below 107.51 as well, and there's a short, a serious significant short that's going to happen over here. That's going to be what? That's going to be ending itself down here or back to this daily zone. So the map that we are seeing over here is just a funny little ranging scenario that we are seeing over here that's likely going to come down to this trend line or come down to that. So that's a 21 pip type of a move, and although that 21 pip move is going to give us a very low risk trade, it's going to give us like about 5 pips raise, which is going to be above here. If we break below, my stop loss is going to be over there, but I'm not so much interested in that day trade for now. I want something of a swing. So the dollar yen give us that impulsive move. This is a correction that is giving us possible continuation to the downside. So we want to see that continuation. If we break, we need to break below 107.51 though, right? If we start to see price coming down below 107.51, then we're going to be targeting this area. We're going to be looking to break this area. We're going to be looking to come down to this particular area over here. But the price is going to be moving a lot in range because we have so many zones in that particular location. So for the dollar yen, for me personally, although there's a low risk trade of about 5 pips or even between here and here, I can stick my stop loss over here and have a trade like this. Have a trade back to this zone. Second, delete. And the stop is just above this area. But what I'm trying to say to you is, I might be having that 13 pip stop. For me to go down, I need to be able to break 107.51. 107.51, then I have this challenge over here as well. But as soon as I break 107.51, at least because this is an impulsive move down, right? This particular correction should be able to give us another possible continuation to the downside, right? And come closer to this area, all right? So that's my idea at the back of the dollar yen, that impulsive move down, all right, giving us that particular correction. Break down below this trend line will lead to touching this, all right, which can bounce us back up. But because we have literally left the 107.51, I'm still anticipating that this lower area here of 107.30 will be another level where it needs to be broken structurally for us to come down to the lower part of the channel. So if this is a wave in the making, I want to see what we are respecting. So as you can see clearly, this impulsive move give us that correction to almost 61.8, although it looks 38.2 over here, all right? And then where we find challenge to retrace back up is at closer to 1.618, all right? And then that's where buyers come in, okay? And those buyers are looking to take this up, and then let's see the next sell-off where it's gonna end. So the next thing we're gonna do is bring our fib all the way down here now to this second point, lower the lower point as well, the bottom point as well. 1 second, and then we see where we are bouncing off. So we are bouncing off equally at 50, and then we might be targeting 1.618, which is going to be somewhere around there as well. But before that, we have the 1.217 location somewhere over here, which we'll be targeting, right? So if I'm looking at this as the beginning of a wave as a result of that impulsive move on the 15-minute chart that we are currently seeing, that's where price is going. This is the correction of 1 to 2, and if this is our 2 to 3, and this is a valid, this right here is a valid 1 to 2. If this are 2 to 3, which is a valid one, retracement should be giving us at least 38.2, which is somewhere over here. We have a little bit of an extension to almost 61, which is a much more deeper retracement. I'll be looking for price to come down to 1.272 first of all right, or even 1.382. If we get to base 1.618, then I'll be looking for a serious buying influx into the dollar yen. All right. So we cannot hide behind the fact that the impulsive move on the current time frame that we are seeing is to the downside. That's where the money flow is. The correction is to the upside, and then we have an impulsive move to the downside again, where we are seeing the 3 to 4 wave correction, and then we might be looking for possible continuation to this particular downside. That's where everything is setting up for. And that will begin at the break of 107.51. When we break 107.51, we are looking for continuous push down to the downside, which we might be ending somewhere around there. And that is the 15-minute start breakdown of this. And if we get that, I know we have a one big significant daily level over here where we'll be looking to buy back again. Let's have a look at it. Yeah. So this bottom area, if we come back to revisit it, this is a key buy level for us, okay? And this key buy level is tallying with a couple of Fibonacci as well. You know, it's tallying with 1.618. So I might be looking for another buy in this area, which is the key area, which is going to give me a low risk anyway. And that low risk trade can be that buy opportunity that we are looking for in the dollar yen. So if price returns back to that area, right, I will be looking at it for a buy opportunity. And that buy opportunity, you remember in the dollar card as well, at the lower level, we're looking for buy opportunity. So if price is getting to that same level at the same time, that's when the dollar index will now become important, right? I remember Wumi was talking about dollar index. The dollar index will become important in making decisions if the dollar yen is returning back to this level, which obviously that's where it looks like it's coming down to, right? With the current money flow, you know, until something changes. But for now, that's where it looks like as if it's coming back to. It's been respecting the first wave down that trend line, you know, and then obviously the fourth wave to the fifth wave is looking to come down here. And this is an ultimate buy location for us. This ultimate buy location is going to be offering a very low risk. It's going to be offering a very low risk. And I'd rather take a trade over here, okay, to bounce off and look for possibility of price breaking. Yeah, seriously, because look at that. That will be first, third, second double bottom, and then this will be giving us a triple bottom, you know, and that triple bottom is a buy opportunity at around 107, let's say. right, 106, 106.92 area. All right. So my buy trade opportunity for this, I'll be looking at this area. I think it's a key daily zone as well. 106.92. If we come down there, there are a couple of things that's tying up together. 1.618 previous support, and if we manage to break it as well, then obviously that's going to be a great shot for us. So key level to watch out for on the dollar yen remains the low, which is right over here, and that's the best trade that you can ever look into when it comes to the dollar yen. Let me see if I can put that trade on. Okay, so I'm gonna give us 2 to 3 minute break to reflect on what has been said. Let's say 5 minutes break. I'll try and get some water to drink. I hope you are gaining value out of this, how the trading opportunity is coming together, and then which one to avoid, which one not to avoid. It's all about breaking it down and seeing it clearly. So what I'm going to do now is, yeah, I think my platform is still update. They must be doing some. So for now, I'm gonna be. Let me write the trade that I'll be looking at, and we cross check it next week. We pick some very important trade on gold during this last week. We go through that one as well by winning uh 106.92. All right, but I'll be looking plus or minus. I'll be plusing about five to that, which is gonna be 106.97. All right, or exactly 107, even because it's a psychological number. I'm a stop loss. Equally, I can give that 50 pip stop loss. I don't want to take 50 pip worth of a loss, but just to give a little bit of a room to wiggle, and then I'll stay at 42. My TP, this is going to be an important swing trade. If we get it, that's the best trade opportunity by far that I've seen at that particular triple bottom low, and then the target, if that is going to work as a triple bottom, the target will be, the first target will be this high, 109.38. So we'll be looking at possibility of having a low risk trade that's going to be targeting at least 230, 50 pips for a 243 pips. So that would be, that point right there will be the first target profit if we are bouncing up so fiercely. Let me delete all these feeds first of all. They finalize their job. Delete that as well. Delete that. So I'm looking at this area, the area down there. I'll be doing the possible long trade on a triple bottom. It happens. You see that happening times and times over again, and everything setting up on that 15 minutes is making that a possibility right about now. So you need to see some of these things happening before they get there. So this more or less like support area is a wonderful spot to be looking for a trade opportunity. So yeah, so target equals target at 109. Okay. So I'll be watching this closely on the 15-minute chart when we get down there. All right. Okay. So we take that 5 minutes break now. I'll be back at 10. It's gonna be 10:25 my time. Probably that'll be 8:25. The World Equal time. The GMT, which will now lead us to beginning the actual class that I wanted to take today. Anyway, okay. So I hope you learn one or two things out of that early first 2 hour session. So I'll be doing that 5 minutes rest for now.
don't worry. Any mistake is an income, is a wonderful revenue for you. So I tell myself and told my young people, before 20 years old, being a good student, when you entrepreneur, just to learn some experience. Before 30 years old, follow somebody, go to a small company. Not only in a big company, it is good to learn processing. You are a part of a big machine. But when you go to a small company, you learn the passion, you learn the dreams. You learn how to do a lot of things at one time. So before 30 years old, it's not which company you go, it's which boss you follow. It's very important. A good boss teaches you differently. And before from 30 to 40 years old, you have to think very clearly when you're working for yourself. If you really want to be entrepreneur. When you're 40 to 50 years old, you have to do all the things that you are good at. Don't try to jump into the new area. It's too late. You may be successful, but the rate of dying is too big. So 40 to 50, think about it. How you can focus on things that you are good at. But when you are 50 to 60 years old, work for the young people. Because young people can do better than you. So rely on them, invest on them, making sure they're good. So when you're over 60 years old, spend time for yourself. On the beach, sunshine, right? It's too late for you to change normally. But this is my advice to the young people. 35 years old, make enough mistakes. Don't worry. You fall, you stand up. You fall, you stand up. Enjoy it. On the 25 years old, enjoy the show. I have a rich father. Tried it 3 times for university. All failed. I applied for Harvard for 10 times. All failed. They don't even want to see me. For the last time, I went to the teacher's college, which is considered the 3rd or 4th class of my life. One job, 30 times. It was so difficult at that time. I was so frustrated because the university, my pay was $10 a month.
All right, I'm coming.
Because I could not find a good job in 1994. Discussed that I'm going to do something called internet. And 2 3 of them, I guess, never heard of it.
Right, so for everyone who is joining today, I want to say thank you for coming in. I hope you can hear me. So the second part of the session will now begin for all the people who are joining. And today, I will continue on market structure, looking at structure and looking at possible trade opportunities, and then obviously discussing what we did last week. So I'm going to start with gold. On this, I'll go through one trade I discussed and how that trade managed to materialize, and obviously we take it from there. First thing first, I mean, I do most things technically at the same time. I look at fundamentals, but if we read this, um, gold price prediction, price drops on profit taking. So gold prices moved lower as a round of profit taking took prices of the yellow metal back to the open of the week. This forms a doji day with a long upward wick, which appears to be a rejection of higher levels. The US dollar was down for the day, but up for the week. Gold volatility, as reflected by the gold VIX, moved lower on Friday and was down for the week, which generated 5 consecutive lower week for gold volatility. Trade gold reaffecting. All right, so let's see. It will take time for the economy to come back. So gold prices move lower following two consecutive sessions of consolidation and such a 7-year high. Resistance is now seen near the April highs at 1,747. Higher resistance near the August 2012 1,700 prices appear to have bounded at the 10-day moving average at so short-term momentum has turned negative as the fast stochastic generated a crossover sell signal. This happened as the fast stochastic is printing a reading of 76 coming from oversold level, which will foreshadow a continuation of a correction. Medium term momentum remains positive and has started to consolidate as the MACD convergence divergence histogram is still printing in the black with a declining trajectory, which points to consolidation. It will take time for the economy to come back. New York Federal Reserve John, in an interview on CNBC, said he sees some part of the economy coming back online, but that's going to return to normal this year. Initially sees a return to construction jobs for services jobs like restaurants and bar. It takes some time to come back. All right. So having read that, the other side that I like to see is Forex Live, just to have a little bit of perspective on details that 7 ways to perfect your trading system. Let's see, technical analysis. And then we go to what I'm actually seeing and see whether they have anything on gold. Okay. So the price of gold made a run lower in trading day. The fall was helped technically after the price fell below a topside trend line yesterday. The underside of the trend line was retested, okay, before moving lower today. The run to the downside has fallen below 200 moving average, but momentum stalled the last 6 to 7 hours. Listen, the run to the downside has fallen below 200 moving average, but momentum stalled, okay? The last 6 to 7 hours, I've seen the price move above and below that moving average level. The market is unsure of the next move. All right, that's our own job now to find the next move. Okay, and my voice is lagging somehow. Okay, most probably is the internet. Sorry about that. Into the operation technically is the price has not been able to reach the 38.2 of the move up from the April 1st low at 1679. If the sellers are to take more control, the price needs to reach and break 38.2. Retracement level absent. That and the correction is simply a plain vanilla correction stroke retracement. That is, the sellers are really not taking the bull or bear by the horn. We could see a rebound and resumption of the bull move. So sellers have been rewarded with a $30 decline today. However, there's work to do to reap more rewards. What will ruin the party for the sellers looking for more? The 1709-18 area is home to swing lows from Tuesday, Wednesday, Thursday, move back above that level, and the water becomes a little more. All right. So they've said everything they feel like saying. Someone says it's profit taking, another guy says it's retracement, all sorts. It's not a problem. Let's look at what we are seeing. So we go back to a monthly chart quickly. Okay. All right. So this is our monthly chart. Okay. And as you can see, basically, I was talking about this trade, right? And the gold has been in an upward momentum. Okay, we have corrected. We are back in an uptrend. Okay, but there's a possibility. One thing I want you to pay attention to this one carefully. The thing is, we closed below the last 2 months high. Okay, the first month's high and the second month's high. If the strength is really there, right, we should be able to maintain one of the high. But I'm not saying that is such a bad thing, but we've closed in a weak level. All right, we are a little bit weak. The gold is a little bit weak, although the trend is still up. So short-termly, the sellers came into the market, they did a good job, and obviously they were able to push the price lower. And when they push the price lower, they are giving us some kind of opportunity, either a short-term, low-risk opportunity, all right? And that opportunity, as you can see, the previous month, let me delete this and start again. The previous 2 months high coming at 1689.24. That's an important level for us to note. Okay, 1689.24. Any trade back above that is giving us a short-term possibility of continuation to the upside. All right, 1689.24, and then 1735. Those are key technical levels that we've previously attained, but now we've come down below it. 1735, 1689, 24 are key levels. But this is the trade that we saw in the class at that particular point in time, you know, and then that's the trade I wanted to go through with you to give you a bit of perspective and how to be seeing things in a much more clear form. So the gold market was in an uptrend, but that uptrend literally stalled and give us a retracement down to this particular low at a point in time, you know. So at that point in time now, we managed to find a possible reversal pattern. This pattern over here is a reversal pattern, and we break above it impulsively. We corrected back, and then we come back into a consolidation that now gives us this continuation to the upside. So this continuation to the upside has not been breached yet. All right, this continuation to the upside has not been breached yet. We are still looking to the upside on gold, but we've seen some couple of downside pressure coming in lately, all right? And that downside pressure can be an opportunity to snap on a very cheap gold. I'm coming. To snap on a very cheap gold, that's where we are. So the major trend, you know, like one of the key questions that I ask is number one, key 5 questions. What is the major trend? What is the major trend? Okay, then you now start to be seeing perspective. The major trend is up. Okay, number 2, is momentum increasing or decreasing. Okay, number 3, are we currently trending or consolidating? So even you need to investigate that on the chart. Number 4, are we near any major area of resistance, which is the mass psychology area, or support? Those are places where things can easily change. Once you have these 5 questions at the back of your mind when trading, and then is there any trend changing pattern? So this will give you a clear perspective on where everything is going. And so delete, delete, delete. All right. So easily we can answer that the major trend is up. Okay. And then obviously the other thing that I want you to pay attention to on this screen is the area where we are. So right now, you can't see any single indicator, but obviously we can decide to measure price to see precisely where we are. So the measurement that I'm giving price right now is I'm looking at the 618 area and I'm looking at 78.6 area. All right. So, and that is on monthly level. When you have that area on monthly like that, those are big areas. It's always important for you to see where the real investors in the market, where they are acting. All right. So if I decide to delete this now, this Fibonacci, knowing fully well that I've got those big areas on my chart, what I can see is the price got to that 78.6, trade a little bit. Let me bring it back. Trade a little bit above 78.6, and then we sell off completely below 78.6, which is leaving, exposing all this area between 78.6 and 618 for us as an area to take advantage. All right, so if I delete that, so these are more or less like this Fibonacci on monthly can be an area of support and resistance for you. You can see our price use the 618 as a support to bounce up or resistance to sell off in one way or the other. All right, so I've deleted that. So now let's look at this on a weekly level. Now, we know fully well now that the momentum to the upside is decreasing. And why is that? Because we've traded below 2 months high. Okay, we've traded below 2 months high. So the momentum is decreasing. Although the monthly chart looks so bullish, this is still looking bullish. All right. But you cannot overlook what is happening currently. So the weekly shows us a particular week move of continuous selling pressure to the downside till we even close below previous week high. We close below previous week high. And this is the previous week high over here, which is at 1688.60 on this currency.com gold chart. Your own might be slightly different if you are using a different broker. Okay, might be slightly different if you're using a different broker. So those are key levels for us. So we've closed below that weekly 1688 area, and we closed much more very weak. Okay, so the key thing over here is this: on the first day, pay attention. When we hit that 78.6, we hit that 78.6 somewhere over here. That's the 78.6 level, right? So what you can see is we saw a sell-off. That's the reason why the wick is high. The next day now, however, give us an indication of continuous sell-off, although it's a small body candle, okay, but the sellers coming to overpower as well on the second day. All right, so look how long it's taking now. Yeah, then the third day now was what gives the indication of that particular sell-off again, that the sellers are in this market. They've shown themselves up from this level. They came in on the second day. On the third day, they continuously show us their presence. Wait for it. And these are the key levels to start looking into next week. You remember what is the major trend? The major trend is up, okay? Is momentum increasing to the upside or decreasing to the upside? Already now you can see that the momentum is decreasing going to the upside. That is a caution, all right? That is a caution for you not to just jump into the gold trade and start to buy, all right? The third thing, however, is one second, please. Let me bring the question into your perspective so that you can be following it. Yeah, this is my very small laptop. My big laptop it's no more worshiping me. It's finding me. I think it's too hot in Africa, and then I must have lost one of the fans. All right. So going forward, which is good. So the next question, control Z, is now we are seeing it clearly on daily. So although the trend is up, but look how we are changing perspective. The momentum to the upside is decreasing, okay? And are we currently trending or consolidating? So we are not trending up, but we are seeing possibility of this move down, which is a trending down. So already the trend is up, the momentum, the answer to that is decreasing, okay? If the trend is up, you want to be a buyer, all right? But if the momentum is decreasing, it's showing you that you cannot buy immediately. You are now looking for opportunity to buy. Are we currently consolidating or trending? So we are now trending in a funny direction to the downside, okay? And what is that doing for us? Are we near any area, any major area of support or resistance? So the major area of support and resistance that can now turn things around is the next question that we need to investigate, all right? So if we need to buy, if we really need to follow that trend up and be a buyer, we need to be buying closer to that kind of an area because the trend is up. All right. If we need to buy this, we need to start looking at this area here, previous area where we find buyers coming in. Down there, down there, you know, you can see their influx, you can see the influx of buyers, all right? But before we get there, we still have some time to consider before we get there. So, but what did we actually see in the class? When we hit this 78.6 now, yeah, this is how to now tally it on the big time frame, we hit the 78.6. Now on the small time frame, what are we looking for? Let's go to the daily first of all. Let's look at possible area which we discussed beforehand when we were marking the structure of this chart. So we were looking at this eye, all right, and then we were connecting these two eyes. First of all, that's how we started. Okay, and then we've noted more than anything else that the third point, which is the third area where we're gonna have a touch, will be a particular area of sell-off. Because the first time we touch it over here, we sell off, we come to it again, we sell off. By the third time, we are expecting that sell off because at that third location, that will be the highest area that we've seen in gold in recent times as well. So any high prices, traders are more than happy to sell to take advantage. Another high price, more than happy to sell to take advantage, because where are you going to make the most profit? You're going to make the most profit when you sell the high. All right. And where you're going to make the most profit? You're going to make the most profit when you buy the low. All right. Either buy that low or buy that low. So what did we actually see? So when we see that price is coming down to this area, I was alerting the class to a sell opportunity. All right. And we've done all this before price actually gets there. For some of my students that's taking the mentoring class, we managed to see this and discuss this as we progress. And the next thing is we are now looking at this low level now. Okay. So this point right here, going forward to that point, so the first point, the second point, and extrapolate it forward. Okay. First point, second point, extrapolate it forward. We are looking at that area for a possible structural bounce. All right. So, and then where did we find ourselves? Even before we break it down, okay, this already looks to us like an asymmetric triangle, that gets to its end before it breaks down. So you can see that the price that starts to shoot up here got itself into a squeeze. If you know this first point, yeah, and then you can tally with the second point, and then now you're seeing the third point. Definitely, it's not glaring to us that we got ourselves into that squeeze. 1 second. All right, so going forward, having said that, we can see that our area of support and resistance that we'll be targeting, or our area of support, first of all, has been broken. But what did we see in the class? I want to bring that question back up again. Sorry. And that is where I'm going for your next trade idea. All right. And then we now look at what we are seeing currently and how to deal with what we are seeing currently. Oh my God, that question is not respecting the writer. Okay. Okay. Let's look at it from this perspective. So when you're getting Bernard Imogede, do you know any Frank Imogede? Bernard. or Mario Imojebe or what's the name of my other friend? Right. So going forward on gold, all those 2 points extrapolated together is telling us a story, and the support and resistance that you might be looking at for a possible buy now has been broken. All right, that's the current place where we are. But where I'm going is this: we were looking at that 78.6. We are expecting the sellers to come in, okay, and then what we then saw was this. We saw when we actually touched that particular trend line that we have on daily, and we had a rejection, okay? And then we started this. We started looking at what is going on. How does that rejection come in? Is it a money flow to the downside for the people who took that class with me? Or is it just a rejection? So we saw this impulsive sell-off, all right? This impulsive sell-off was the beginning of all those moves that we saw in gold. So at the back of this impulsive sell-off, I allotted the class to, we have a funny more than so, more or less like a left shoulder, and this is the edge, okay? And then we are looking for the right shoulder, all right? We're looking for the right shoulder. At that particular point in time, we haven't got this right shoulder coming in because I know for a fact that we've attained a high and we are looking for a possible reversal pattern, all right? So this in itself, if this is the right shoulder and this is the head.
Which one? Yeah.
And then we start to see this is the beginning of the change of the money flow. This is the sell-off, all right? What I then do was I extrapolated the first sell-off that begins that move. And this is where the magic begins. And everybody can do this. The first thing you want to note, I'll write it down for you, is that monthly 78.6, okay? If you don't have a strategy, this strategy is very profitable. You don't have to stress yourself, all right? All you have to do is just wait for it, okay? And start looking for it on all the charts. And before you know it, you'll be generating more profitable trade than ever. You'll be generating more profitable trade than ever. And then you will look like a genius when you are not even one. But pay attention to the strategy, and it works, it works, it works. All right, so we saw that impulsive sell-off. We are expecting a possible sell-off at the back of that daily trend line that you can see, okay? Price trade above it, the first 15 minutes, the second 15 minutes, which takes 30 minutes to trade above it, okay? And this is where I'm talking about patience. You have to have that patience. And after that 30 minutes, we couldn't continue above it. We saw that significant sell-off. That significant sell-off, which means when you are getting to those areas of daily highs or lows on your market, on the structure of the market, on your market structure, that's where you want to, on the daily zone, the weekly zone, that's where you want to have a bit of patience to see who is actually going to come in. So it takes 30 minutes. The first 15 minutes, we traded above it like a joke. The second 15 minutes, we traded above it like a joke. And the third 15 minutes, we sell off, all right? So in 45 minutes, this sell off occur. And that is what alerted us to the sellers are now in, all right? At the back of that sell off, however, what did we see? We saw retracement, correction, all right? And this correction failed at 618, all right? Fibonacci. Look how things are tallying up. And when it fails at 618 Fibonacci, the next expected target was back to 618. All right. So when I'm doing this, right, look at what I'm now saying. And this is how I'm going to be tallying things together. I've now seen that 618 to be the next area that I'm looking for. So if I'm joining in and I want to be taking, if I want to be scaling in, if I do not expect this, or I do not know that this will happen, and I want to be scaling in, and I saw this retracement and I take that, even if I do not take this, right? I saw this correction. This was the correction where I took, okay? And this is what I'm trying to show you. You need to understand and be able to see clearly what the impulsive move are, all right? So this is that impulsive move right over there. To the downside, however, this time. All right, another impulsive move, okay? Just be following where the money is going, okay? And this is the third impulsive move, all right? And that third impulsive move ended at that 61.8. I know we have a sell-off to this daily low, you know, and that's the reason why I like to keep all this line there, all right? So after the first wave of sell-off, the second wave of sell-off, the third wave of sell-off, which obviously you can see in the fifth wave Dow theory pattern, right? Which is 0 to 1, okay? 1 to 2, and then 2 to 3. 2 to 3 and 3 to 4, which give us the 5 to 5 completion in that zone, all right? We have a fifth wave completion. At the back of that fifth wave completion, a lot of traders who have seen this, who are technically inclined, they are now looking for a buy opportunity. So I took this sell-off. I was on the road. I was expecting this before, and I was on the road when it happened. I took this sell-off, all right? I had one buy funny trade before, okay? And the buy trade was at the back of the break of a particular trend line, but I know that it's a short-term buy trade. So if I see anything that's going to make me change around, I want to change around immediately. Then I saw something coming in, and that's the reason why I took that sell-off. And I'm going to show you, alert you to it now. Right. So on this chart, there was a doji that's occurring at a pivot point somewhere over here. So henceforth, the London session begins, right? The traders come in, they couldn't take all this stupid correction anymore, and that sell-off occurred and ended itself at 61.8. And that is not magical. That is just you having an informed knowledge of tagging the eye where the sell-off begins to the first initial low, right? The scaling in opportunity would have been at this 2, which is at 618, right? Which you want to take all the way down to 1.27, possible another target location. At that 1.27, look at how everything is tallying up. And we haven't used any indicator. We are just following where the money is going. At that 1.27 now, right? You'll find a bit of rejection, and that rejection still tally with this massive correction that's happening. Okay. And what I was targeting is either to buy above this high or sell this particular high as well. So the first point of the correction, the second point of the correction, extrapolated, give us the third point, and that third point, we saw that sell-off, which is the 4 to 5 wave, we come to the 618. All right. So having said that now, yeah, the next thing that we are seeing in the gold prices has reached a target. Right? Once price has hit a particular target, then there's band for turnaround, okay? And that band for turnaround, we start to see whether price is going to turn around. So once you reach a particular target, yeah, in a trending direction, either upward or downward, then you want to be looking for that particular turnaround, right? The turnaround will take massive force to actually occur. The reason being is the sellers are present in the market, and the buyers are now going to be thinking to themselves, okay, do we really have more strength to turn this around? So the sellers will be fighting the buyers will be fighting. Hence, you'll be seeing all this tight range. But the most important thing out of this tight range is what you need to be watching, which is the low. So the low that we generated, right? I know price is going to continue to the downside, right? After I saw this. And the way that I know is this. When you look at this low, let me delete this first of all and pay attention, right? I don't care what time that low is generated. When I look at this low, right? This low gives me the low of 1707.26, okay? And the sell-off was able to breach that low to 1706.40. The new low that we created after the first initial low, right, is 1706.40. The first initial low is 1707. So we traded at least almost $1 below the previous low. So that is first alert to me that, okay, now I know what I'm looking for. I'm looking for an opportunity whereby new sellers will be able to come into this market and take advantage of higher prices. New sellers do not want to sell this low anymore. The only person that's going to sell this low are amateurs who are thinking, okay, the price is just going to be going down. Now you have to be tallying things together and start to understand what is actually going to happen. So I bought this low, and then I know that the only place that I'm going to be targeting is this consolidation high, right? So I made a bit of profit on that, and then we came into class. And then we started training. I think we sold somewhere around this high as well, you know. So we sold somewhere around this high. Some people get out of that trade early. I got out of the trade as well when I got myself alerted to the point that this low now are now acting as more or less like a support. We are not going below this last low anymore. So that started to alert me into the left shoulder. All right. But the first thing that I saw was this on a smaller time frame level was once we hit the low of the 618, yeah, and then we saw a retracement, right? Then there was a trend change that started to happen. The trend change now was after this sell-off, we now have a possibility of this. Let me show you. And you need to start to see this clearly on your chart. If you really want to go far, look at the low, right? What is this? Is this a lower low or a higher low? I want answers in the chat room so that I'm not just talking to myself. Is this a lower low or a higher low? Oh, since I'm the only one in. All right, so I am Olajide repeated that it's a lower low. It's a lower low. Really? What is this? This is a high. This is a low. What is this? Is this a lower low or a what? Higher low. Somebody says higher low. Okay. Another person says higher low. Okay. Another person says higher low. Really? I'm talking about this green point. Now let me expand the chart. We need to see things clearly and know what we are talking about. So all your answers are there. You can't change it. So we have a high over here. We have a low over here. What is this? Let's see again. Higher low, higher high. Right, this is madness. Serious madness. What is this? This is a high. This is a low. This level over here compared to that, what is that? Thank you.
The lower high. Lower high.
Exactly. Lower high. All right. So we have a lower high. Don't worry. Mistake do happen. It's just knowing too much. All right. So let's delete that again and start all over again. So we have a lower high. All right. So there's no confusion. This is a high, this is a low, okay? What is this now? That's an ellipse that I do not want. All right. So these are the indications. Let's follow it again. Sorry. This is a high, this is a low, and this is a lower high, okay? And what do we have here? What do we have there?
Higher low.
And that's a higher low, all right? That is a higher low compared to this low. That's a higher low. And that is an indication right there of a failure to make a new low. Number one, look at the way we are coming down. 15 minutes, 15 minutes, 15 minutes, another 15 minutes, 15 minutes. Then later on, I'll do a class on how to read trend and understand the auction process that's actually happening over here. And then 15 minutes, 15 minutes in a double bottom, right? There's a double bottom slightly occurring over here. It takes 15 minutes to see it clearly. And then we have a higher high. And then over here now, we're talking about a what? We're talking about a higher low compared to that. And it takes first 15 minutes, another 15 minutes, 30 minutes, 45 minutes, 1 hour. And usually what we are seeing in a trend down is each 15 minutes is giving us a new low, new low, new low. When we got here now, it takes 45 minutes to try to break the low that we can break easily initially. So that is a sign when price is taking time to achieve a particular action. The action that we need to achieve over here was to continue to the downside, as glaring as it is. But it takes so much time, 45 minutes to 1 hour over here, to continue down. That is alerting you to possible change of direction. So you need that little bit of patience to see what price is doing. If price is coming down this way, it's not making any difference. The next, we print a new low, we print a new low, right? And then we switch. This is a one-time frame market. This is a one-time frame market. A one-time frame market will just be going in one particular direction. And when we have this one, this little bit of overlap to make a high that's over here, right? We are still in a one-time frame market, but we slightly change to a two-time frame market. That may be a bit difficult, don't worry. But we make a new low, we make a new low. And over here now, easily I can see that we go back into a two-time frame market and then we switch. And everything that's happening over here is showing me the time frame transition, how we are trying to transfer the auction process, right, with time, right? And the auction process starts to change with time. The sellers are now getting fob out of the market easily, and then there are no more there. And then suddenly we trade above our trend change area, which is that inflection point over there. And then we make a new high right here, right? So when we start to make a new high over there, the one thing that you want to do is look at it. This is the low that gives us the target, right? This is a lower high, and this is a higher low. This is a market failure to continue to go down to the downside, and then we change trend on this particular target that we found from that particular high. I'm going to be able to go back from the beginning of that sell-off. We start to change, all right? And then we start to find ourselves back at this particular range high, all right? We come back down low, see, can we take out this low again? No, we couldn't. That's why the fact that we come back down to that low, we still can't take out that low. We start to consolidate, you know, and that consolidation goes a very, very long way. 1 second. So mere saying that we are not making, 1 second. Mere saying that we are not making any improvement at all in breaking down the low, all right? And time is going, it's taking time, right? After this low, we can't see any break of the low. There's not even a weak or a slight little change at all. So that is what alerted us at that particular point in time that this is looking like a right shoulder to me. This is looking like a head, okay? I'm looking for a possible reversal pattern in this zone, and then I stick up my Fibonacci to the low, which was that target down there, okay? I've seen that it has started to give me that indication that we might be looking for a possible we might be looking for a possible right shoulder now, all right? And then I'm looking for that Fibonacci low. I'm sticking from the high to the low, which was that previous target, right? And then remember, we are in a 78.6 region, all right, on the monthly time frame. Now, where did we come back to? Where did we come back to? Where did we come back to on this Fibonacci? 78.6, and that is your trade, all right? So these sellers that came in, you don't know they're gonna come in, or else if you do this extrapolation, all right? They push price down the second time, they push it down the third time, and after that third time, they've completed that wave of selling, all right? And after they complete the wave of selling, you can see them drying out by not giving us a new lows, right? We are not getting a new lows despite the fact that it took how many hours? Look at this. So it took us 17 hours, right? It took us 17 hours to form this particular wave down, okay? After that 17 hours, time is very important in trading. It now took us, and we were going down, okay? It now took us, before we break out, it took us 1 day and 5 hours, all right? It took us 1 day and 5 hours to continue that breakdown, which never happened. So what can you typically see here? This is a ranging market, which you don't want to be part of, right? Which you don't want to be part of, because you're going to sit down in this range for ages. But how would you identify the beginning of this range? You start to identify the beginning of this range. 1 second. When after the initial low has formed, you've seen the lower high, right? And then you've seen the failure to make a new low, and then the trends change above here. That is the first alert, right? That is the first alert right there, because it's different. Look at this one right here. When you investigate this, you see that price come all the way down there. You have a lower high down there, right? You now have possible low over here as well, right? And then you start to have a lower high compared to all that down there, okay? You now have possible low. You can see gradually we are breaching the low, and then you have a high over here, which is lower to that. You can see that we are actually trending down, and then we now come to this low over here, right? And then for us to go up, we first of all go up, like I say, we want to continue down to the low, but we didn't. We form a failure, right? And that failure keep pushing price back up, all right? We come back to that same level instead of us to continue down. We didn't, right? And these are the key levels for us, because this is the target level. We didn't. We can't push down below that target, right? And we start to see a higher high, a higher low. We push back up, we didn't see no higher high, we see another higher low. All these higher lows over here is an inflection point for you to be able to see clearly that if we're really going to be pushing down, time is going, we just need to push down. All right, so that is alerting us to the fact that the sellers in this market now, they are looking for a much more favorable place to short again, right? We've short at the back of a key level, right? They are in the market. And the most favorable place to short again is to sell closer to this high or sell at some sensible point, all right? And that sensible point that we're looking for now is going to be what? 78.6. If we get that 78.6 trade, right, as I said in the class the other time, we're going to be looking for the same target. When we come here, right, there was a 78.6 on the big time frame. Now we come to that smaller time frame, we found another 78.6. We're going to be looking for a target of 1.618 down there. All right. So now pay attention to this so that we can see where we are going in the gold trade going forward. Possible potentials that can be happening in the gold trade. So where did we stop now? Where is this? Can you see this 0.618 is the same thing as a 1.618 extension of everything that's happening. So we touched the 78.6. That is that sell that you're actually looking for if you've missed this one, right? And then I mentioned this beforehand before we even see that, right? So we come back to 1.618, right? At this 1.618 now, right? What can we see? We start to see price now trying to do a little bit of a fading away. We break it down a little bit again, but absolutely more than anything else, this is the beginning of likely reversal pattern. Likely reversal pattern is occurring again in the gold. So if you've missed, this is an opportunity to scale in again, okay? So we're gonna be looking at that particular low area. And remember, we're on a 15-minute chart, but knowing fully well that we've attained a target, the last time we attained a target over here, we start to see sellers drying off. So we got to a target over here now. We are looking for possible sellers drying off, okay? Plus, we start to form some kind of reversal pattern. And this reversal pattern will be giving the people who look at RSI, will be giving them some kind of divergence. Let's look at that briefly, although that's not what we wanted to do today. But if I put in relative strength index, okay, and then if you follow and understand divergence, what can you see? At least I haven't put in the RSI before I start to tell you about, yeah, those people will be looking at divergence, all right? So this RSI forms a low over here, as you can see. Let's investigate that. So if you can read the chart just the way that I read it, you'll be finding it difficult to use indicators. Let me delete that first. That's not the one that I want. You'll be able to see this is giving us a low, right? The RSI over here, the price give us a new low, the RSI give us a new high, all right? The price give us a new low, the RSI is giving us a new higher low. So this is bullish divergence occurring, all right? While the price is making a new low, all right? So I can see easily where the bullish divergence is coming from, okay? And where is it coming from? If you understand that you don't need indicators and you know how to tally your prices together with the Fibonacci, you can see that when we achieve the target, right, there's a reversal pattern occurring in price, okay? That reversal pattern, although it's inside this channel, this is the key channel for us now that we are looking at, all right? And when we are looking at this key channel, what are we looking for? We are looking for opportunity to take a new sell, right? And that new sell, if we start to look at it from the eye, okay, from this eye, where that sell-off occur, to this low where we are currently, right? What we need to see is we need to actually break out of this all these consolidation zone, right? Break out of it and then target this area back. Hold on a second, please. Hello? Can you hear me?
Yeah, we can hear you.
All right. So when you can tally things technically like this, your trading opportunity will be evolving little by little, and you'll be seeing things in a much more clear form. So now we're looking for possible buy coming in. There's already divergence in place. We're looking for possible buy coming in, but we're not going to see that buy until we break out of this reversal pattern. So this reversal pattern can continue, but when we start to break this area, then we can start to look for that buy. And when that buy comes in, this is going to be a next target. And the sweet thing about this now is this: as pretty as it is, and look how gold is respecting technicals as we are going down, is this particular trend line that we are seeing, right, that forms this particular triangle, right? They break back below it, okay, to give us a retest. Is it always a rule that 61.8 level is respected? All right, so this is what you want to do with 61.8. Good question right there, Wunu. It's like this, isn't it? Basically, what you're looking at is this. You're looking at, I have something of 100 or 100% worth of anything, okay? And that 100% worth of anything that I'm looking at, I'm kind of looking at it that if somebody offers me, this is it. Let's break it down. This is the offer. So initially I have 100. Now I have like 88 point, okay? And now I have like 78, and now I have like 61, and now I have like 50, and now I have like 38, and now I have like 23, okay? And now I have 0, okay? If I want to be increasing my holding in anything, okay? If I have, one second. If I have 100 before, right? And I thought to myself, I need to increase my reserve, okay? And somebody offer me 23. I look at it, if I have that 100 before and you're offering me 23, that's 123. If I can have a bit of patience and wait for it to be 88, will I have more than the person that have 23? Now I will be having 188 just because I can wait, rather than jumping in on 23 to give me 123. All right. So the people who has got the 100 are the people who start to sell from ear to ear. Okay. So if you're looking for 23, that means you jump back on the bandwagon and sell here, and then you'll be looking for targets down there. Okay. At 61 now, which is the question that you ask, does price have to respect it? No. Does price respect it sometimes? Yes. Most of the time, most likely. So what I want to do at 61 is this. If I know for a fact that price will respect it or price wouldn't respect it, everything is 50-50 chances. The chances just, or the odds just become more higher once we start to get to 61, right? So if everything is 50-50 chances, once we get here, probably the chances become, say, most probably 61% more higher, okay? So I'll be looking at this 61 and say to myself that, is it a good place, all right? Okay, but now I'm looking at 78. I'm saying to myself, is this a good place? This daily trend line alone, yeah, tallying together with 78 alone, is making me to think so strongly that this may be the next possible place. And I will want to take that 78 if price gets there more than jumping on 61, because I can add 100 to my 78, I still have more than 60, it's a deep, yeah, it's much more of a deep discount, you know, and the 78 is a deeper discount. But now technically, you are not just adding the 61 alone, okay? The 61 falls into Edward. The 61 falls into 71.8 of the monthly, if you remember this area. If you remember this area that I draw on the monthly, falls in almost into there, all right? The 78 goes a little bit well above that, okay, which is going to be alerting all those strong traders into more sell-off. But the good thing about everything is this: at your 61, it's not only the 61 that's there, all right? You still have the daily high low in that 61 area, all right? So now you have 2 points there, okay? At this place, this is the 78.6, all right? And then this is price just because of overflow and everything and excessive orders in the market. You can see that price giving you that wick formation that's going to bring in the continuous sell-off in this area, all right? The next thing you want to do is this now. You've now got a gradient down, okay? So your gradient down is everything that tallies together that you want to be looking at. So you are now looking at this. This is the I, this is another I, and then price, if it breaks out of here, is coming back into this particular area. Remember what used to happen when we are using those two areas together, right? And these are big zones as well on the daily, but although we are on a 15-minute chart, so clearly we can see that there's every possibility that price will become so stubborn, right? Not only stubborn, but possibly break above 61.8, right? But if price decide not to break above 61.8, and then, and as gold we like it, gold always like to overflow, like lure people in. But we have started to look at it and we're starting to see clearly that, okay, that eye there, if that eye there is respected and we form this low gave us a particular target at 1.618, right? And at that area, right, although we traded down below it, at this 1.618, it wasn't actually respected fully. We traded down below it, but we are still in the same zone. Who cares? Anyway, all we just want to know is we have our technical area there. All we want to know over here is we have our technical area over here. And this is what we are watching. We're going to be watching for rejection candle. That is the key, okay? The same rejection candle that we see right here. 1 second. So we don't care whether 61.8 is really important, but we care about seeing the inflow. All right. So for us as a trader, it's more of seeing it occurring in that area that we specify. So we specify this area, right? We don't know what's going to happen, but what we care about is the visual. We want to see, and this is the advantage of the people who trade off floor, who actually trade on the screen. This is the advantage that they have over people who are on the floor, because you'll be able to see the composite of the market as a whole. So what you're looking for is that rejection in that area. So on 15 minutes, this is a clear rejection. This candlestick. Exactly. So we note our area of confluence and watch price behavior over here. So over here, we know this area, we watch price behavior over there. And that is the right way to do it. Once you see price behavior over there, but the thing is, if you cannot be there, right, there's still nothing wrong, right? Instead of me now to say that, oh, I'm not going to be there and I've done all this work, okay? I'm more than happy to take a risk as a trader to say that I'm going to put a trade over here anyway, no matter what the case may be. Okay, I might be putting it exactly at that $1,731 dollar per ounce of gold. exactly at that area of 78.6 mathematically. But instead of me to put it exactly at that area, I can come down a little bit. You know, I can come down. This will now be my position. I can decide to lose $1 extra or $1.53 extra. I don't really mind. I can put it somewhere right here. If price goes above it and even goes up to 88.6, well, I wouldn't really care more than so. I still want to have my stop somewhere above here. So this is going to be my trade idea if I am not going to be in the market. So I'll be looking at this, right? And I'll be saying to myself, my risk is going to be down there, okay? The good thing that I'm following is I'm looking at a wave pattern, and then I'm going to be targeting possible area like this again. Okay, 1.27 down there. That's where I'm going to be targeting. And that is my trade idea at the back of putting the work in, at the back of seeing things clearly. But what I'm going to do again, if I now have the opportunity to watch, or if I do not have the opportunity to watch, I'll go on my phone. I'll switch to my core level app, right? And on my core level app, I'm going to be noting the price. One second. Let's see. Where's my video? I think this one has gone video. Right. So I'll go on my phone. The most important prices. Let's see. I will go to my core level app. That's my core level app on my phone. It's called core level app. I will go on it. I will look for gold. Go to commodities, and I'll look for gold. You know, right there. So my 1618 level, I want it on my core level app. You know, in case I'm not going to be available on the chart. And that will be basically, let's see, that will be 1719.84, right? And I'm going to add a no. That would be 61.8% retracement. All I need to see is, do I see a 15 minutes or a WOZ code or a 1 hour rejection on that 618, you know, 61.8% retracement, possible or potential short entry. I'll put my target below, which is 16 CP, 1661. 33, and then my stop at the high at 1746, so that I can easily just go into my brokerage account. So that stop, I want to put it at probably a little bit more, 1748 or so, right? And then obviously I can go into my brokerage platform, and then I know that is there already, and that is my goal. When we get to this particular price level, obviously what I'm going to be getting is going to be that alert, and looking at that alert, I will be knowing fully well what my analysis are, and then at the back of my analysis, I will just know that it's time for me to take action after I see what the 15 minutes to 1 hour can do, after I've seen what they've done, and you need all these little tools just to allow you into getting things done in a much more simple and less complicated manner. So that is the idea at the back of the Go trade. And when you look at it technically, you can see how everything matches up together. And the key thing again is this. If I'm looking at this as possible formation of a 5-wave pattern, say for example, I know when we come back down to this area, we would have made another low, all right? And when you look at this low, it's starting with another weekly level of 1658. So that's my next target. That's my next target. If I manage to get this 17, 20 to 1731 area, right? I want to say 1658. Then I know for a fact that this wave formation is almost near completion. It's almost near completion. 1 second. So what I expect you to do is follow the strategy, the stop, the target profit, everything is well inclined into it. I know for some people who doesn't understand the wave theory, although price tends to move in waves, they might be finding it difficult, but continuous attending of the class. When I stipulate it that, okay, let's have a class, we're going to have a class, we'll be bringing things in a much more clearer perspective for you as we proceed. And one good thing about it now is this. You can see a possible wedge formation which is expanding in a manner, forming. And if you can follow this and price decide to be respecting all these areas, then we now have a gradient at which we want to be progressing as we go, And if we end at 61.8 as well, I'll still look for targets somewhere around there, and then I'll go down to 1.618. So in a way, you will still be able to catch most of the opportunity. Then that will now take us to this. That will take us to our question. Are we near any important support or resistance? Let's go back to that for our chart 1 second and bring this up. So back to that 15-minute chart where we can see the influx or where the money flow is coming from. Now we have a price possible divergence in the making, and once you get to a point like this, you don't actually need any trading signal from anyone. Once you can do it on your own, you will be. But the lazy thing about most people is for them to even find the trade like this, they tend to become lazy about it. And then even if you are wrong, just post your chart into the chat group. I will be able to have time to view it, and that's how you get better. Even if you are wrong, just post the chart. I mean, posting the chart shows you put a work into place. I didn't just get to be able to do all this in one single day, but what you need to learn is a continuous learning process. It's a continuous learning process. You need to evolve. All right, you need to evolve and continue to add tools into your toolkit so that by the time you are merging everything together, right, whether you have indicators or you don't have indicators, price, target levels, new entrants, just being able to compose your thing on the chart, as simple as it's easy for me to be able to say it this way, you will be able to get to that level and be seeing those trades evolving before they even occur, because now you have important tools at your disposal to be able to see them. When I pick that trade, I know for a fact that, okay, at that 78.6 on monthly, I'm looking for a reversal level. For that reversal level to show me completion, and I need to see some kind of a pattern. All right. The pattern that I need to see in this case, I've looked at the left, right, and center. I'm looking for a possible head and shoulder pattern. And that possible head and shoulder pattern, I've talked about it before it emerged, and such that by the time it's emerging, I'm not going to be a failure in not taking it. And this is the neckline now, and this particular neckline has now given us that break. And this is a very good break. You see, like the moment you break a neckline of head and shoulder pattern, right? These are the key. And then you now break a trend line from a day or from a very long time perspective. 1 second, please. I need to take this off work mode. I've done it again. Right. So let me delete that jargon. It's just because I have it on this funny mode here. Right. Once you break this key location over here, right, that is a trend change in a way on a short-term purpose, right? So what we're looking for now is, even when these traders, right, when they start to push things back up higher, they need to be able to break above this area for us to continue to go back to the up, for us to continue our upside potential. But in the long term, we have seen what is the major trend. We know the major trend still remains up, right? Let's see. Exactly. So, yeah, but we talked about this in the class even way before it happened. So we know the major trend remains to the upside, okay? Is momentum increasing or decreasing to the upside? The momentum is decreasing. We are not seeing that momentum to the upside anymore. So that's alerting us to possible change of direction. Are we currently trending or consolidating? In this case now, we begin a trend down, okay? And when we begin a trend down, this is not consolidation for us. We are trending, all right? So, but we are trending now in a manner whereby we are in this consolidation phase, right? So, are there any major area of support and resistance? That's the next thing.
Notice as I could hear me go.
Sorry, someone is saying something. If you have any question, yeah, if it's not clear, please don't worry. Just ask. I will be more than happy to go over it. This is a little bit advanced, but we cannot get ourselves stuck in the mentality of a baby for a lifelong. So if you are just joining us new, if it's not clear, if you are looking at it and you're saying to yourself, what is this? Just ask questions. Then we'll be able to see how best we can help you. So is there a trend changing pattern? That's the next question. The trend changing pattern now is we've broken two structures, right? The first structure that we've broken was this structure of the head and shoulder pattern, all right? And then the second structure that we've broken is this trend line, and that is a powerful break. Right there, what we are looking for is we've seen that trend changing pattern, all right? Which means we've changed slightly to the downside, okay? So what we are looking for now is two things. We are looking for now further continuation of short. If that further continuation of short comes in, what we're going to be targeting is the important area of support, which is down here. All right. So this is what we're going to be targeting in the long run. So you can see this massive base, right? And that's the eye of the base. And if we are targeting that, right, we are nearly there, aren't we? Where we are currently, okay? But the sellers that's going to be able to push anything and push it past this level, they need to re-emerge. We need to go and find that seller. Nobody wants to sell gold where it is right now, okay? Reason being is too cheap, all right? People like to sell things that is way high up so that they can make a much more decent profit down there, all right? And if we are making this particular profit down there, this is going to be bringing us to that key support level. When we get to this level now, right, this is where also different kind of mind psychology is likely going to start to happen, all right? And we might break it down a little bit and start to see that reversal back to the upside. So that key level right there is the level that can change the directional shift in gold as we try to emerge. And you can see that price is actually avoiding that place after the sell-off. So we're still looking for sellers that's going to push in, and we are looking for them to come in anywhere from 38.2, all right? Because that 38.2 now is going to be the previous neckline of this particular head and shoulder pattern, right? Or we're going to be looking for them on this particular level over here. So we have key levels between 38.2 and 78.6 where we're going to be looking for rejection. All right, we might decide to see that rejection at this area as well. Take note and pay attention to it. If it occurs at 38.2, it can give us that particular sell-off that we are actually questioning. You know, there's no crystal ball anywhere that will now take the trade back down into this key support level, So if we have that rejection at 38.2, then obviously this particular trend line, the eye of it, will be looking as a stop area, and then the amount of profit that we'll get will be reduced anyway, but at the same time, it's a 3-to-1 trade scenario. If price push itself back down to this level, it's going to be giving us almost a 3-to-1 trade scenario. But yeah, that is where we're going to be paying attention. We know we have a weekly level at 1688, so that is catching our attention in all these places here. And yeah, that is it for me on gold. That is what I'm actually looking at, to be able to take a trade from this location again. Yeah, that is the most greedy location that I'll be looking for, and then sell it off to that level. But I'll be thinking of the neckline as well that got broken, you know, but gold like to just go beyond and beyond those areas to kind of lure people into thinking, yeah, the trend has changed, we are now going up. But yeah, literally, technically, this is where we are. And yeah, I will be looking for shorts in this key location. I'll be looking for shorts in this key location, right? And then I'll be looking for my target at 61.8, that key location as well. And when I get that particular target, I know for a fact that that is hitting a major support area, and that area right there, I will be looking for possibility of a reversal trade, right, in this key area to continue to take us back up higher. All right, so have it at the back of your mind that the major trend is still to the upside, but rather now we have a short-term trend to the downside, and there's nothing that can change that because we've broken key levels of head and shoulder pattern. We've broken key levels of that daily trend line. So the pressure more than anything else is to the downside. The pressure more than anything else is looking to the downside. So, and we cannot neglect that. All right. So that's what I see on gold. So currently now I'm going to move on to other charts, and I'm not going to be doing much of talking. I'll just look at possibilities that's coming up. I've given you the teaching. If you have any question, I've given you the strategy. If you have any question, please do not hesitate to ask. But the rest of the class, I'm just going to be doing some charting of of what is coming up. So if you want to follow, you can still carry on following. If you want to take a break, you can take a break. If you have any questions, you can post your chat. I want to say at the same time, thank you so much to Best. I want to say thank you to Bishop Johnny. I want to say thank you so much to my friend Damien. I want to say thank you to Dora Junju, Edward Aladi. I haven't seen him in ages. Thank you for joining in, Edward. I want to say thank you to Engineer Ambrose, my lovely fellow, always there at the same time in the class. I want to say thank you to Muhammad, all the way from Somalia. I believe is the Somalia Muhammad. I want to say thank you to Jumia. I want to say thank you to TJ, Tiltek, Titilayo, Toby, and Boki. I've got Wumi there as well, and I've got Yembe there. If you so much enjoy what we do, no problems, no problems. What gave the impression that we'll be shorting it for a while? All right, good question. Good question. Titi, right there, let me go back to it for you so that you can understand. Probably you didn't join us early. So we're talking about structures. I like when people actually ask questions, okay? I don't find it offensive or anything, but it brings clarity. Yeah, I will, no problem. No problems. No problems. Um, I will definitely update it on. I will upload it on YouTube. You know, the last class on that one got crashed on my system, so I've not been able to put down YouTube. But this one, yeah, I'm using a different, my smaller laptop, so I'll be able to update it on YouTube. And also, let me see. I mean, for taking your time out to be part of this today. I like when people actually take their time out to learn, you know. It, it's empowering, you know. The situation in Africa needs to change. And the change, you're welcome. The change does not occur in one day. We all have to be part of the change. The situation around the whole world. Where is everybody from? Please, if you can just send me, thank you, Mr. No problem. If you can just send me where you are all from, right? It's important for me to see who we are touching, how we are impacting people's life, you know. So if you can just send me what part of the world you are from, I'll be more than happy to be keeping that in my diary to see how best we can reach out to more people, you know, and that is quite important. The last video, I want to go to the last video. 1 second. And then I will treat your question in a little bit. I didn't forget. I'm silly idiot with all this. I'll be treating your question in a minute now. Wait. Mm. Yeah, an assignment somewhere. 1 second. Okay, so this is the last video, the link to the last video on YouTube. Okay, and in that link, right, if you thank you. Let's see. So we've got so many people. Is it advisable to buy the retracement based from Nigeria? I'm going to answer that question too. Titilayo all the way from Nigeria, Lagos, Utah, Wumi from Manchester, Wadora from Kenya. I'm near Kenya. I'm actually in Tanzania. 3 days from Nairobi, Kenya. I passed through Kenya when I was coming down to Tanzania. Been to Zanzibar, you know, it's such a lovely place down there in Tanzania. Jumai. Oh wow. I've got someone from Ondo here in Ile. Nice to meet you, Mr. Kimbo at the Ogun State. Could be anyone from Ondo here and could Nigeria. Great. Wow. So, I mean, we need to do everything within our means to help our country to grow, you know, and then it's all about empowering each other in a very capitalistic manner because without money, things cannot really happen, you know. If you like what we do here and you want to support us, there are also different kind of means of support. You can support us with PayPal, you can support us with Bitcoin, you can support us with Ethereum, Litecoin, Ripple, Bitcoin. Um, those are the means of support that you can render to us. If you have any other means with which you can use to support, I will be grateful and I will appreciate it. There's no amount that is too small, that is too large. That will just give me a sense of responsibility to know that I have a sense of responsibility, which I always have anyway to the community. But it will just make me feel like I say we are all in this together, and I will help everybody to go beyond your imagination. So that is the link over there. Now back to the question. You can copy that link, save it. It's in the chat group. Now back to the question on how do we know that we will temporarily continue to sell on gold. Let me see. Right. So you look at this. The structure of the market is important first of all. The first part of that structure is this. The first part of the structure of the market, wow. Hold on a second. All right. So the first part of the structure is right here. And this is the second part of the structure. And this is on daily. okay? So once you have it like that on daily, you can see easily that once you touch this structure over here, there's a sell-off to that level, all right? And then you go to that structure over there, there's a sell-off to that level, okay? And this is the first time, the second time, the third time, all right? The fourth time, are you there? Sorry. It's my wife. This time around, I'll find it hard to mute her because she just wake up. Right. So, sorry about this. When it comes to women, you can't really loud it up too much. They'll be thinking, anyway, you're on holiday and now is trading, what kind of a human being are you? That's what woman does. They don't, some. Right. So going forward, if you can hear me, which one is that? And I can't hear it. All right. So this is the key structure that we are looking at in the gold market. All right. So can you see the reason why this sell will continue? Number one is this. When you investigate the monthly, today is the 18th of the month, okay? We have come down below the high of last month, come down below the high of 2 months ago, okay? When you investigate the weekly, you can see this weekly rejection below the previous week, okay? So now what is key for us is when you look at here, let's look at that previous week level. And you'll be able to see it somewhere above here. I mentioned it as well. Last week high. Some of the prices might not be the same, but yeah, let me find it quickly on this because it should be on my chart. Those are how you recognize weakness. Are we falling below the highs that we've seen before, or we are still staying above those highs? 1 second. Yeah, it's right there. Probably I didn't. So last week high with the high of 1688.60. Probably I didn't have it marked up. Yeah, it's there, 1688.60. All right, 1688.60. So now let me quickly go to that 15 minutes, 1 second. So you're looking for 1688.60 over here now. Those are key levels now. All right. If we are able to trade above this level, this 1688.60, trust me, believe in that, right? You are now looking for possibility, and there's a way to trade above it. I'm talking about if the real money currently, the impulsive move, was able to come in and push above it, all right? I'm not talking about all these small guys, this little correction. The real impulsive move was able, pay attention, to move above it impulsively, okay, then you are looking for possible continuation to this level. That is the key to watch for. So right about now, yeah, the reason why I know that we are in a short-term sell is because we are still below this previous week high, okay? We are still below this previous week high. If we trade above that previous week high, I will be alerting myself to that particular 78.6 region, 618 region, 38.2 region. That's where I'm going to be alerting myself to. So the first key level is to be able to trade from where we are currently, which is 1684, yeah, and trade that $4 a way up. Okay, once we trade back above, then that is it. I'm thinking we are gonna go up to my 78.6 level. And this is how I map things out. This is how I can know which direction we're gonna go. But now look at it. You know, I'm alerting you to the structure. We hit that, we come down, we hit it, we come down, we hit it, we come down. Have we hit it again? Have we hit that structural level again or not? Yes or no? Exactly. So once you've hit that level, it's becoming clearer to you that that is an area where some sellers push back into the market. Structurally, there's nothing you can do about it. That's just what the structure is commanding, because at the structure, when you are reaching high level, price needs to balance itself down, all right, by finding balance at the bottom again. Now that's where price needs to, you reach high level. You know there's no way. I mean, price does not just rise up forever. Okay, so for this rise, 1 second please, for price for gold to go to 1 million or 2,000 or whatever, it's not just going to go up like that. You know, it's going to be going in a zigzag formation, you know, and that's zigzag formation. That's where we are going now. You know what I mean? So on this daily structure, we've seen it. We've attained that particular region now. Okay, what we need to do now is to be looking for the region below it where we can start to do what? Where we can start to come in to buy again. All right, so this might not be clear enough. If I put this like this, it might not be clear enough. But if I switch to the, oh, you can't hear me anymore. Can you still hear me? Can anybody still hear me? If you can hear me, please type 111 in the, all right. Oh, no problem. So some people can hear me. All right, no worries. Thank you. Okay. So on that daily now, okay, when the daily trend breaks as well, what does that indicate? That indicates that the directional bias has changed. Okay, so these are key things. Number one, the reason why, all right, so let's put it down into writing. And you see that. So we have traded below logically previous monthly high of 1703.35, previous to monthly high of 1689.24. We have traded below previous weekly high of 1688.60. We have traded below previous 2-3 days low, you know, all this low over here. We have traded below them, you know, and that is how we know that we are just pressing down the low. We are not going up higher because we are closing below those lows, you know. And then now you can see how the daily candle, I was alerting you to look at how the weekly candle flows in a inverted hammer formation, which is a complete indecision at that top, right? And then the daily now closed with that particular doji, which shows you indecision after the trend was going up with this bearish engulfing candle. And this is more or less like is this a morning star formation? This is more or less like a morning star formation, let's say, on that daily. I believe I should get it right. Right, it's an evening star. An evening star formation. And that's a candlestick signal. And that candlestick signal, the entry, you can see over here, the target, you can see it down there, the way that one is being traded. But yeah, more than so, what we are looking for is we've done our target before, and based on your question, I was just showing you that structure that got broken, that's alerting us into understanding that the trend is down, all right? And once that has occurred, the only thing that you should be doing as a trader is to be looking for better prices to sell, you know. And what you're going to be doing is you're going to be looking at that eye, connecting it to that one, all right? And obviously you want to look for possible price retracement back to the upside. Okay, and then take advantage of that, all right? So you can't really say you want to press further selling over here, but I mean, come the new week, we are in a volatile environment. If more silly news continue to come up, then we find ourselves in a position whereby we can even have a significant drop down. But even after that drop down, like I said, technically you are more than happy to find yourself in a position whereby you are waiting for price to come back to you and take you sell, because we are in a region whereby traders are literally afraid, you know, and they're going to be looking for a safe haven. Gold has always been a safe haven, although we are falling now, you know, and technically if we are falling, the best thing to look for is that opportunity to be able to sell at the high prices. It will come, and that's why we look for that 78.6 to 61.82 at 8.2. You know, this right here is a zone where the killers occur. Okay, so if price comes back above this zone, which will be a very good opportunity for us to see price coming back above this zone, then gold will become so expensive, you know. then more people will be more than happy. The same people that have started this sell-off, look at them, will be more than happy to take advantage, even knowing technically that there's a trend line over there, you know. So that right there, waiting for that, if it takes 2, 3 days, 4 days for that to approach, it will give a much more profitable result than just jumping in. If you jump in, that means you have a risk of close to about, and you know how gold moves, you want to sell as close as possible to this trend line. You have a risk of about $46 on the table if you just jump in right now, you know, almost 4,881 points. So wait for it. And that is going to give you more peace of mind knowing fully well that this is where my risk is, and my risk is going to be low in this area. If price manage to trade above there now, then I know that I'm wrong rather than just jumping in and not being sure. Okay, so that's one area whereby we are looking for trade back into all these zones and then finding that sell off in that kill zone with very profitable trade opportunity. Price coming back into all this area will be providing such an opportunity. So yeah, and then we put the fib at the back of it as well for us to be able to identify the right zones where we can take advantage. For example, again, that where we are, that right there. So 61.8. So I said anything from 38 to, okay, take a little small position, 38 to a little small position. Let me see. If you're taking a little small position on a risk level, let's see what is likely going to occur. Hopefully this is going to come up now. And see the kind of profits that can emerge. So that's going to load up. Right, is that question answered? Is that question answered? It's it. And then there's another person that asked a question. If you have any question, don't hesitate to ask. Right? So on the risk level, on the actual real market risk level, this is what we're going to be looking at. We're going to be looking at, you're welcome. We're going to be looking at risking, hold on a second, it's loading up. Okay. We're going to be looking at risking 38 to 1703. $1703.94. Let's leave it at 58. The stop in this case, the actual stop should be 1747.25. 1747.25, which is the high that we've seen. So let's say we are 1748, okay? And then the take profit at the back of that will be 1658. So this will give us the opportunity to withstand all the volatility. All right. So the risk in this case at 38.2 might not be promising enough. Okay, let's investigate it, and that's a good thing that I like at the back of the way that I show you how to do this. So you're gonna be risking 35 pounds, yeah, to gain 36 pounds. It's highly possible that you're gonna make that 36 pounds rather than that losing that 35 pounds because of all these areas. Okay. All right. So let's leave that position in for now, and then back again. We now go ahead and look at 61.8, 1720. So that position is in the market for me, 1720. Let me say I don't want to use 48 exactly. I'll use 30. Okay. In case we're gonna have a whipsaw, and then we're gonna be putting at the back of your stop should actually be at 1739 really and truly, or above that 1739, above this high. But yeah, I'll leave it at 1748 at the same time as well, and then I'll be looking at 1658, maximum 1633. So this one, that means I'll be risking 22 pounds to make 49 pounds in this case. If price manage to get to 1633, then I can make more. But I'm not going to be having so much ambitious target, but that will be the next target that I'll be looking for to scaling, you know. So 16, and I can look for that particular target because price has broken that level as well. But I'll go back into it. Let's go back to 1658, because at 1658 or 1660 level, I'm expecting, which is the Fibonacci 1.21 to 1.27, I'm expecting some kind of retracement back again. So I will modify that. So that's more or less like more than 3 to 1 percentage level. Okay. And then the third trade that I want to take advantage of will be this 78.6 level, you know, where we have this particular point, or it can be where this trend line, where price meets this trend line, but 78.6 level will give us 17 more. So 1730 to 1732. So let me say, and then have another sell in the market, 17. This is in 50, okay, and I can have it to the exact 1732, and then my risk at the back of this one is 1748, and then my target, I'm looking at 1660 level at the same time of 1662. In this case, I'm going to be risking 13 pounds or 14 pounds to gain 54 pounds. So that's the best risk reward by far for me. So if every of this trade, if price go through 38, I'm in the market. If price go through 61, I'm in the market. If price go through 78, I'm in the market, and the result of that trade will be giving me all these kind of return. So the return, that's the return. Hold on. The other ones, I don't think I analyze it. Sell limit. I have the 1703 just because I didn't close it. 1703.94. That's the 38.2. 1748. That's the most risk, and then this one is a 1660. And if I check my chart before the price finalize to modify, I'll click OK. So that one is the market. The second one that I need in the market will be the 17, 20, 11. Uh, 17, 20. Don't worry, I'll copy and paste this into the book. 48, so I'll choose 30 and I'll leave my stop at 1748 at the same time again. That's the most best length of stop. I don't expect price to get there, and I want 1662, and then the kill zone, which is this zone, there's multiple stops there. Price can reach this area. There's a key supply and demand zone in this zone as well. So I don't mind taking the 50 level. Which is 1712. Sorry, 12 or 10. And then the stop loss in that case again, 1747, 48. And the take profit that I'm looking at is 1661. Let's say 1661, 1662 again. All right. So all these funny little trades. Let me snip it into the chat room. And I think that's the 50. That's the 78, big one. So whichever one that you look at, and I'll show you, if you look at the ticket and you feel like as if you can't manage that risk, that's a trade that you wouldn't take. So say for example, you look at this one, £13, and I want to take a position in gold for £54. I'm okay with that one. That's the one that I'm going to set as limit, you know. Uh, and whichever one that's a bit too high, that doesn't fit your risk profile, that's the one that you leave alone. But you know, in the market, I'm not a seer. I cannot tell you precisely which one is going to go through, but I'll be able to guide you accordingly are the key ones that's going to go through. And the advantage of this is if you take them and they all follow through according to plan based on those technical analysis that we've done, then the profit is yours. If you take them and they do not follow according to plan, try to maintain a low risk, you know, and obviously the gold trade might not be the best trade that you would take, but it can be part of that trade that you take as well. So we have one trade on the dollar yen that I'm hoping to take. That's the best trade by far, where we are looking at this 14 pips more than so to generate close to about 240 pips. That right there is the, yeah, we've done dollar card already. You'll find that in the recording, and the trade for dollar card has been set up as well. We've done dollar card already, so I haven't set this dollar yen up. If you have any question, or if you have any pair that you want me to look at, this is the time for you to start posting them in. I'll briefly look at all that, and then we shall call it a day till we meet again shortly. All right, so the trade for this one we are looking at, I think it's at 106.92. Yep. So I'm looking at that 106.92 for a buy at the triple bottom. So I'll add about 5-7 pips to that. So 106.92 plus 5, that'll be 106.97. Okay. I'm looking for that trade for a 50 pip stop loss. Pip stop loss, and then I'm looking for a target profit of about price finding itself back to the high, this area 108.06. So Oh, okay. So yeah, we are looking for possible touch of this one. So this would be the first target, and then I'm looking for a second target at 109.32. So with that, I think I'm gonna have two orders in the market. Say for example, my limit and 109.38 as my target. So I'm just gonna use 109.30, 109.38. That will leave something on the table for the market. All right. So the risk at the back of this does not have to be 50 pips. I deliberately make it 50 pips to just give it a bit of a room. If I find my rejection quicker enough, then I'm more than happy to move that risk. Yeah, that's on dollar yen. So if you have any pair that you want me to look at, don't hesitate to send it across. And for my, yeah, well, this is where I'm gonna post the link for the recording. Let me see. The link for the recording, because I need to still, I need to upload it onto YouTube. So this area right here, one of my chat group, is where I'm gonna post the link for the recording. Okay, all right. That's where I'm gonna post the link for the recording. Right. So I'm gonna say let's take 5 minutes break before we go forward, and yeah, then we can continue from there. 5 minutes break. I need to get something. Thank you. In the meantime, we can listen to some more.
And I never thought I was smart. Nobody believes that I am successful. Everybody tries to think it's great. I try to follow 3,000 US dollars from the bank in 3 months that I speak again. We talked over anyways. He said, I'll be tomorrow. So I said, I think this thing could be big. I never thought it would be that big like today. Like something is waiting for me, and I have to work hard to prove myself. That was the spirit. So we gather 15,000 US dollars from 200. We started. For the first 3 years, we did not have a single $1 revenue from our business. It was not easy. Why? It keeps us going ahead, going forward, because I have received lots of emails of thanks from the company. They say, this is such a great thing. We cannot pay you, but this will help us. If they keep on helping us, one day we'll be successful. And I believe. Little by little, we build up our business. Little by little, we build up our ecosystem of infrastructure. And now, after 15 years, we have a Alibaba group, we have an alcohol group, we have a Alibaba Pay, and people said, you're so smart. How you can make a company like that? Okay, Warren Buffett, Jack Welch, Larry Page, Martin Zuckerberg. The difference between those people and other people, they are always optimistic for the future. They always try to solve the problems of the others. When you're optimistic, it's always people sitting here today. Yeah, where's opportunity? I don't have a job. I don't have this. I don't have that. We are at the best time of this century. The best of that Activity like always lies with conflict. Think about how you can make things different.
All right. So no worries. Going forward, let's look at all these dollar numerated here. Okay. So the first thing first is to take things on the monthly. Setting up the trades for the new week already. The killer thing about this one is, as you can see, structure on this. Gonna be just high level. Right now, I'm just gonna quickly do all the structures of all the pairs. All right, and what I'm interested in is if we are trading closer to any area that's making sense. So the best area that would have made sense for low risk is this low, which we have managed to trade back into on monthly. So there's nothing major. You know, you're stuck in this range. The best trade will be to buy that and sell that. That's the best trade. Anyway, so let's look at how prices behaving. And then the next thing you want to do, step by step, is you've checked the monthly. Now you're looking at weekly. You can see that impulse. You can see that correction. You can see that continuation, correction, continuation. And this is looking like a large impulse, but we can't see it clearly. Let's get closer to it on the daily chart. So on the daily chart, however, beforehand, I saw this on weekly as well. From that high, like we have a little trend that we are following in this manner. Okay, see a couple touches, boom, boom, boom. So we actually need to go past that for us to. So on daily, that's the last touch. It's like we find ourselves in some kind of funny triangle. Okay. Right. Because you need to go back to price, especially in this kind of market condition. So in this funny triangle, we need to find that breakout. The breakout is what is key for us. So we come in there, impulsive correction. Instead of us to see continuation, we can see clearly that we are now consolidating. In that consolidation, we need to see what's happening on the 4-hour level. So on the 4-hour level, we still continuing that consolidation, impulsive correction, continuation, correction, continuation. We reached the key level now, so that sell-off occur. That sell-off should be giving us some kind of impulsive move to the downside on that 4-hour chart. All right, let's look at it well on monthly, on hourly. So the hourly chart now brings the strengthening from the sellers. So the impulsive move down, now see where the correction is tailoring itself to. On the back of this correction now, we're looking at that possibility of a short from here. And it's still about 40 to 50 pips to the bottom side again. Okay, so we get that 40 to 50 pips. That'll be the ultimate target on this one. If we then break down below it, then we're gonna be looking at a couple targets down there, and then ultimately we're looking down there. So if we break down, we look at 4-hour again. That's the target right there, another target right there. And all those targets are where we can see buyers coming again. And if we continue to break down, then we're gonna be looking at further target over here. But yeah, the massive target would have been for us to be able to break first of all, and then find ourselves in this 100 pips range. Okay, to the downside. And why do we choose to the downside? Because the next impulsive move is pointing down. Is that possibly clear? Right. So impulsive correction, then impulsive. But yeah, the stock in a range, you need to actually see that breakdown for us to take advantage. So we are waiting for the break of this. Okay, and if we break up, that's a target. Right? So I have to watch this. Next trade that I'm gonna be looking at. So I've done dollar card, I've done dollar yen, I've done dollar right. On the dollar squeeze now, we look at the daily swing quickly. This is the last swing we're seeing in the market. On that swing there, back of that swing. It has swing from the low to the high. We're seeing 50% retracement, you know, and which is somewhere over there. We couldn't find that continuation to the upside. There's every possibility that we might now possibly see this retracement right there, you know, and it depends if this consolidation the way that it is, if we extend downward, then we can't overlook the fact that we are in a consolidation. So there's no much that I can really see over here. Let me see it on 4 hour. The 4 hour swing will be slightly different. Hey Masood, good morning. So what we are seeing on this 4 hour is this. Might be making sense. The swing down now. Price retrace back to 78.6 almost. Impulse correction, 78.6 continuation. We want to see that continuation to come to at least this area. So eventually we're gonna break in one way or the other. To come down to this area, this can be another key level for us to start looking into buying. All right, so this particular swing up is giving us 68.6 in this area and 78.6. All right, on the daily. Now we start to swing down because we make this high, we make this low, we make a lower high, right? So the major swing that goes up, we've checked it out, which is this swing. You can see here. Let me do it again. Okay, we have 78.6 somewhere down there. And then this is how I'm gonna, now I want to do something dynamic. So if I'm looking to pick a trade, I'm more than happy to pick a trade over here. But this now I have to turn into green so that I know that I have a buy level over there. And why? And this place needs to turn into green because that's where my 61.6 is. So I'm buying in this zone for whatever reason. And my stop is going to be at 88.6 or below down here. That's my stop. If I'm buying here, right? Now what I've done is I've checked this swing from this high to this low, okay? I've seen the retracement back to 78.6. All right. So what I'm looking for is possible continuation. But before that continuation, we made a low over here, right? This low comes in at another 78.6. If I flip this over, you'll be able to see, and that's where buying comes in. All right, let me go over it again. So we make this high to this low, okay? So in this high to this low, this is the daily swing that I'm looking at, and I want price to come back to this area for me to buy 78.6. So I have a buy set up over here. That's why I have this like that. All right. So at the back of this buy setup, I'm expecting price to move up higher, possibly to here, and more probably to here, and continue to go higher. All right. So my trade idea is this. If I don't know where price is gonna go and I want to be in all the markets, so I'll be like this. All right. I'm expecting price to, this is what price is doing right now, right? I don't mind. Okay. I'm expecting that price to come down to this level, at least. Okay. And then find, and in that level, there's 78.6, find a bounce back up higher. And my target that I'll be looking for will be somewhere above. I'll be looking for this target. 1 second. And I'll set that trade up in my account now. Oh my God. For one reason or the other, the Fibonacci line to disappear. All right. So my current swing again, that high to that low. Let me bring it out. From that high to that low, that's my current swing. Okay. I'm looking for a trade that's gonna give me this. I'm looking for that 78.6 discount. So that high, yeah, come to that 78.6 will be somewhere around there, which is going to be the 23% at the same time equally, right? And I want to target the 1.27 right there. Okay, so I have one buy entry like that. And for one reason, this chart is playing off. It's not sustained. Okay, all right. So let's first of all finalize the first swing. I don't care what's gonna happen, but I'll take that trade. I'll be waiting for it because the key to successful trading is to wait for price. Okay, so I'm waiting for price in that area on dollar Swiss. My trade that I'm looking for is at the back of this swing. If it's gonna continue, and generate a possible trend, I'm anticipating a break down to that area, and then I want to find continuation to this 1.27 area. Okay, so my trade at the back of that is simple. Now what I have to do is to make sure that my Fibonacci is split into the right area. So I'm tallying not to the right side. My scale, for one reason or the other, okay, this is what that's what I'm finding challenging. Okay, so at the back of this now, I'm looking at a trade of buying that 78.6. I have to close this and restart it again. The buy opportunity will be on 78.6, and the target will be 1.27. So it's up to me to say that, okay, I'm going to be risking 168 pips for 720 pips if that trade materializes. But the lowest risk that I can have is to put my trade at the back of, to put my risk at 88.6. So 1 second, let's get the number out. So when I set it up like that, I don't really bother myself in checking the prices. Sometimes I will just see profit coming in, and then I'll come back again, do this over the weekend, because when the price is moving, I might find it challenging. I want to build a system that I don't want the price to be luring me into making erratic decisions. All traders go through that, you know. Just because price is moving, you won't be able to follow your system through. So The trade is 93.36. A buy at 93.36. And then this is all right. So 93. Sorry, 1 second. So the price has not even get there at all, but I've already prepared myself down in case price get there. 93.36. And at the end of 1 week, if price did otherwise, let me back it. The stop. The stop is gonna be at 92.64 at least. 92.64. Okay. Slightly below that will be something like 92, 91, 81, let's say 91.70. But my profit, if that comes to fruition, and then we now do the next swing. So I will show you the idea at the back of this now in a second. Bearing in mind that eventually price is gonna have to break and go somewhere. So in a situation whereby if price is gonna break and go up, well, no, 90. For one reason or the other, I think this is trying to load itself again. I've lost the internet. It's gonna come back on in a minute. If not, that other won't go into the market. All right. So while that one is doing some madness, what I'm saying is, if price Ah, so yeah, I realized that. Sorry about that. Thank you for notifying me about that. I didn't even know when that got muted. So does it mean a lot of people hasn't been hearing me all along from the time that, can you all hear me now? So I was saying, thank you for joining in, Tanto. I'm meeting you for the first time. Thank you for notifying me that you can hear me. I lost internet a while ago, and most probably that's when the mute system come on. So okay, great. So if you can hear me, so what I'm trying to say is, you wouldn't really worry so much about um, what is going on when you have a system or you have a strategy, and you'll just be following that strategy, uh, whether there's news or there's no news. In a way, you've set up all your trades, then you want to see the return of that strategy at the end of the week. Even say, for example, you put up 10 trades. Rather now, I think we put up about 5 or 6 trades or so. And then we are building everything at the back of a particular strategy. All we want to see at the end of the week is what is the performance of this strategy. If it nets us 20% alone, then you now start to see things differently. That okay, trading is very simple. All I need is a strategy. If that strategy is making me 20% alone, I don't care about what other, what's it called, is going to do, what the market is doing or whatever. I'm just going to be plugging into my strategy. I plug into my strategy. I'll wait at the end of the week. I see the return. If it's doing that consistent return, sometimes more. If it's not going down below 20%, that is a very profitable strategy. If it's not going down below 20%, that's a very profitable strategy. So that will give you the opportunity to concentrate on working on the strategy and fine tuning the strategy rather than worrying yourself about the price action. So and you're going to be tweaking the strategy technically. So say, for example, now I'm looking at a buy at this 78.6. I want my stop to be at 88.6, and I'm looking at the low over here at 91.81. I can say to myself, let me take a little bit more risk and put my stop below. That is the most important part of trading. That stop, you need to be able to have it. So you can be looking at 81 and say, maybe I want to go down 10 or 11 pips or 7 pips below that. So if I go down 71, right, that is risk in the market. And that risk may be a lot. And then that is the reason why I'm putting it on the live market itself. No problems. We're going to get there. It's just a measuring tool, nothing major. And no indicators. I'm gonna do a screenshot of it and post it in the. So stop at that, and then I'm looking at a target of 1.0097. Okay, so Having said that, so my main idea is to take a trade at 78.6, right? And I want an utmost target at 1.27, okay? And then obviously, if I get a target back to this key level and I see profit in my account, if I have two positions, I don't mind taking profit. You know, if I have one position, I don't mind taking profit. But the key to it for me is to be able to do this, to be able to come into the market and do this. Deposit whatever amount. If you have money, deposit 100,000. If you don't have money, deposit $100. If you have money, deposit 200. If you don't have money, deposit whatever amount and take the low risk trade out of the opportunities that's coming up. At the start of the month, at the end of the week, you can withdraw your money and start again the new week to feel the sense of, you know, the thing is some people really want to wait till they have £1,000,000 in their trading account before they withdraw. You know, it doesn't really work like that. If you make profit, you can withdraw knowing fully well that you withdraw 100% when the market opens back again. You deposit wherever you want to deposit and start the process all over again. You know, have that feel of I work this week and I see my profit, I withdraw some of my money, 5,000, 10,000, whatever, and you're good to go. The start of the week again, I always try to withdraw my money. You know, I don't care about which broker it is. I will withdraw my money when the week starts again. Anything can melt down in this world. We've seen it all. You know, anything can close down. A brokerage firm can close down. So you gotta have to be real with yourself in this business. You gotta have to understand that it's not a joke game, and just withdraw wherever you can withdraw at that particular point in time. At the start of the week again, you continue, but you would have saved yourself something at the back of your profit. So I think I was putting this position in at the 360. Yeah. I'm going to screenshot the feed for you in a minute as well. And then I was looking at the stop level, and this is where the work begins, 91.71. Okay, I'm looking at that risk of £13, and then I'm looking at a target of about £62 if I go through. So I'll look at that, I'll be like, okay, it's not such a bad risk reward, you know, but does it mean I really want to lose £13? Maybe no. Depends on how much I have in my account. So that is the process behind it. You know, if it's something that you can lose, then you leave that trade on. All right. Then the next thing I want to investigate is we've investigated this swing up to find a buy trade in key locations. Now, the market moves up and down. The sellers might decide to overcome. So I want to have a buy position in the market as well. So what do I do? Sorry, I want to have a sell position in the market as well. Okay. So what I'm going to do is I'm going to investigate the swing down, the selling swing down. I'm going to investigate it. In the meantime, just because you asked that question about Fibonacci, let me quickly do a screenshot of my Fibonacci, paste it in the chat group so that you can have access to that. Wow, is it okay, no. I don't know that it's this long. Right. So new. We're gonna do it again. Wow, the rain is serious over here. Well, okay, I'll do that as well. The problem that I have is I'm using my small laptop, so it will be hard for you to be able to see everything. Or else, let me see what I can do in this manner. Hopefully, this will work for you. Okay, I'll copy it into the Telegram group so I can continue. And then you can get it from the Telegram group as well. All right, no worries. So going forward, let me delete this one. Right. So this is what I'm looking at. So I've key in the buy trade at the back of the strategy 7862 to 282. Sorry, 272, 1.272. Now, I want to investigate this down move should in case he has more predominant strength than the buy. So what I then realized, and that's the reason why I took the buy trade, market tends to move in a structure, in a relationship, you know, and I can see one particular relationship over here now. Oh my days. I can see that when this price comes down, we find a swing at 78.6. You might not be able to see it, but look at here. When it comes down to here, you find a swing at 78.6 as well. So eventually, let me see. All right. So we kind of investigate this swing. We find that 78.6. All right. That's 78.6. I have an expectation for it to come all the way down to here. All right. So this is what I'm looking at. Initially, I was looking at a trade that goes up like that, like that, like that, like that, like that, and come down to where? To this area of 78.6 over here, right here, okay? Now, when I'm investigating the downswing, I found 272 over here as well, you know? 272 is a buy zone for me. I'm expecting that when this price come all the way down to here, it would have reached a particular target that will possibly let it continue to shoot up either to this trend line or to this trend line or to this trend line. I'll break that trend line and go up higher to this 1.272 for whatever reason. I don't really care, or get here and bounce all the way back down to this location. All right. I don't need to worry myself about what it's going to do. My main idea now is I'm investigating this swing. I've seen this particular rejection. I'm looking at this swing over here. When I start to do this, what's it called, this analysis, we found a 15-minute impulsive move down there. If you remember, and that is the flow of the money. That's where the money is flowing to right now. You know, look at this. So that is an impulsive move correction, impulsive move, and that correction right there. So what I'm then trying to do is simple. Now I can see the current flow of money, or the institutional sellers are pushing price to the downside impulsively, okay? They are pushing price to the downside impulsively. So impulsive move, correction, continuation. Now we are in a big correction on this 15 minutes time frame, and eventually this trend that we're seeing at the back of this particular currency can still give us a continuation down to the downside. So if that is the case, going back to that 4-hour chart, you'll be able to see where I'm going now. So I'm saying if that impulsive move is strong enough, right? Like this one, impulsive move, correction, continuation, you know, and then obviously correction again, continuation before we see this push up higher. But this push up higher giving us some bit of correction. This can be a big correction in this going up. 1 second. And form a funny channel out of that area. But for now, that is not what we are seeing. We're seeing an impulsive move on that 15 minutes that I'm anticipating. If that continues, it can come down to this low over here and possibly break this low and continue to the downside. All right. And then we find a buy in this zone, most probably, if it does that. Okay. But now what are we doing? We're investigating this and we are looking at this correction, and then we are looking at price to continue to the downside. And in this area, I'm thinking we can find possible buy opportunity, you know. So, and that possible buy opportunity is what will lead me to investigate this swing now, this second swing, all right. And then when I look at this impulsive particular move over here, all right, and then I'm looking at the way price is coming down, okay. I'm looking at the way price is coming down in such a manner whereby it's finding a bit of rejection over here, and it comes all the way back. I mean, this rejection that it finds over here comes all the way down to there, and the ultimate target of this particular move, this particular swing, is coming down to this 1.618 as well. All right, so in this area now, I've got 78.6 in this area. I've got another confluence that if this swing is going to complete its downward spiral down, yeah, it's going to find target around this 0.618. So me having a buy opportunity over here can literally be a good advantage for me because I've got confluences of Fibonacci. I've got 78.6 of a larger swing. I've got 618 of a smaller swing in all this area, you know. So that having my buy in this region can be a significant buy that can generate the kind of return that I'm looking for, if you get where I'm coming from. So the sell-off has started to occur. If it is this swing that is going to become more powerful, and that is the correction at 78.6, you know, I'll be looking for targets to come to this area of 27.2 first of all. So in this area as well, I would have loved to take this sell, but it's already on the way, so I'll leave it alone. So in this area as well would be another area whereby I'll be looking for another buy opportunity in the market, you know. And when you look at this area, it kind of corresponds to a larger area where that buying strength, impulsive buying strength, tends to come in as well. Okay, so I can be having another buy opportunity in this particular area. I will note that. But I've taken this one already, you know. So if this one was the one that managed to materialize, I know I have a buy set up in that particular area as well. So what I'm gonna do is I'll put my buy position over there that I'll be investigating as we continue, you know. And then this is now going to be a much more lower risk for me because I know that there's 618 of a particular swing in this bottom area. So I can reduce my risk on this one to this level, which is going to be right below this area over here. I don't know if I'm making sense to you at all. Right below this swing over here. So I don't mind having a trade with a low risk down there. In this area, having a buy trade with a low risk down there, and then obviously putting the risk over there will give me a possibility of a 4% to almost 4-to-1 risk reward in that trade, you know. So I'll be risking about 79 pips for that 422 pips profit in that zone, you know. And it's a key zone as well. It's a key zone whereby you can see like more or less like a double bottom in this area. If price gets here and we find a reverse, then it might be a good area for me to have a trade over there. Okay. So those are the kind of little trade ideas that I'll be planning on the dollar Swiss in case, yeah. But the key areas for me are these structures which I've noted. Just because I can't find any trade closer to the structure anymore, then I'm investigating deep inside to see where I can find trade. So that's that for me on dollar Swiss. I wouldn't mind to put this buy trade up as well. Because they are in different locations. So I'm looking at that 0.272. The most important thing for me is my stop is in the market. Plus my Fibonacci count, I'll do it again. So the sell that I would have loved to take was this swing, but it's already on the way, so I'm not going to bother myself so much about it. The next swing would have been this one, which is in that area, which we're going to investigate in a little while now. 1 second. So let me take this trade of buy limit of 93.96 on that 272 Fibonacci. $93.96, and then I'm going to be looking for the stop to be below 93.20 area. Let me say 93.15, and then I'm looking for a target on the upside scenario of the target I'm going to be looking at now will be if price decides to stop at that area. I want to be looking at my price in such a manner that, okay, price has come like this, give me that, and stop in this area, okay? I want to be looking at a golden zone opportunity that if price gets back to this area, that's the area whereby I can see possible sell opportunity again in the market, the 61.8, and it's corresponding to all this area of trend line and everything. So I will be looking at the respective targets in that zone, tying things together. And the ultimate target that I'll be looking at will be towards that eye as well, which is that area of trend line if we get a serious reversal going back upside. So I have that area 98.44. But mind you, I'm more than happy to take the 61.8 as well. So 0.9844 maximum. But I'll check my chart back and see what that is going to give me if we if that position get activated, and yeah, so I'll take this one off. So on the sell side scenario, the way this is coming, now the next swing that I want to investigate is, you see the way this one goes up and come all the way down like this. And this is a 4-hour chart. So I would have been looking for this particular swing to hit this 78.6, if it does hit it, if this trend line wasn't available, such that that's where we are finding challenges right about now, or 61.8 zone, and then I want to take this sell opportunity into my area over here as well. So I'm looking at this swing, this high to this low, this retracement back up. Yeah, I will be looking at 78.6, but obviously there's a trend line that's stopping that, which is not such a bad thing. And I'll be looking for a target of 27.2, which is somewhere over there, or maximum say 618 in that particular zone for A to B and C to D type of a setup, or impulsive move all the way down this, saying it as complete correction, and then we start to break down all the way down. But that sell is already on the way, so I'm not going to touch that anymore because I'm not going to have the best of what's it called, trade location to take that. And the 718 would have been the entry. Now we are at 96.41, as you can see, more than, sorry, how many pips? About 16 pips. Okay, it's not steep. Sorry, I think I didn't get that one right. From here, let's pick up this. So that's about some. Let's see again. About 54 pips. So I'll leave that short alone. It's not more than 50 pips. But if price retreats back down to the trend line, then I know that by this trend line held over here, held over there, probably if price retreats back to that trend line, then that's when I can possibly look to take a short. So those are the kind of little trade ideas that I'm looking at on dollar Swiss. I'm gonna move forward. If you have any other pair that you want us to look at, then I'm more than happy to look at them. I want to see what Aussie has got. Give me a second. Wow. is the Aussie US dollar. Let's see what we have structure wise. An emerging pattern in the Aussie US dollar chart. And for one reason or the other, my chart is not loading up. I don't know why. Let me try it again. Let me share the screen. All right. And normally what I would do, so going back to looking at the structure, I'll do all these 3 times again so that tomorrow I'll be able to have another fresh perspective. You know, I can see something today and tomorrow I'll be seeing another thing differently. So in that area there, that's a major low. Now we've traded back above it, and the rule is once you break a low, if you trade back into it, then most probably you're gonna go back to the most recent high of the structure, which is in this area, you know. But before you get there, there are a couple of other areas which can be very challenging. But now this has given us an important flow again that the market can be looking to break. That's what's important to me. I'm not going to bother myself so much about all these highs, and I just want to look at the recent market structure. All right. So what I can see is this continuous impulsive move down, and this might seem to be a correction. But this correction, just because we've traded back above this low and we use it as a base support, in one way or the other, I might be looking for price pushing up much more higher. I don't need any more complication on the monthly. Now I want to investigate the money flow. So using the weekly chart now, I can see the key area on this weekly chart as we continue to flow all the way down is those two structures, which is on top over there, okay? We're having some impulsive correctional move all the way down to a key level over there. So, and then I can see we have another key level over here and that particular low over there. So in one way or the other, the way the price action behaves was, although we break through this area, we trace back above it, you know, and then we kind of retest it, and then we start to continue to the upside, if you can say. So the demonstration is this. You know, this low is a key low, that low is a key low, such that when we attain this low, we kind of bounce back up, then we sell off back to this low, and then we kind of bounce back up to that area, and then we come back to this low where we've managed to break. So that's the key low. The other thing that I'm going to do at the back of this key low is to use this key low now to extrapolate the next kilo, such that if price decides to be breaking all the way back down, I'll be looking for a new buy opportunity somewhere around this area. But that's in a couple years or weeks or whatever to come, depends on how bad situation looks. So now I've got my structure point of reversal. Now I'm going to go into daily. So on the daily chart now, what I can see is the way the price is moving down significantly. And then I can see that we have this point there on daily. And then we have this point there too, okay? So my next high point is coming up on daily. You can see that sell off, we trace back to it, sell off, and then we are nearly approaching that area again, okay? Which means if we go back to monthly quickly, let's look at this area briefly. Right. So I'm back on monthly now. I want to look at something that we've seen in gold a while ago. So let's say the major moves in the range that we've seen over here over a long period of time was that. So having said that, most probably you should be able to see what I'm trying to come up with. If you remember quite vividly the gold trade and the analysis at the back of it. All right, so we've seen a move up, we've seen, wow, this might be a very larger time frame. Harmonic pattern, 73.2. So we should be looking at 78.6. But it's not up. Oh no, yeah, that's a cipher pattern, 78.6. Okay, so we have a cipher pattern on this pair right now. All right, that's good. And at the back of that cipher pattern, we'll be looking for possible that's 8.2. We'll be looking for at least this possible target. Right? And if care is not taken, we can find ourselves all the way back here. So that pattern, if it follow through, is definitely a cipher pattern. No, wait, yeah, it's below 78.6, isn't it? And it can be a sharp pattern as well. Exactly at 88.6 is a sharp pattern. The move end exactly at 88.6. So that can be a sharp pattern as well. And then obviously 38 to and 50% gradually. So we can still get a push up to this particular level 71.82. All right, just bear that in mind. So we are seeing a very huge situation coming up there. So everything works for one reason or the other. All right, so, but like I said, in this area, we tend to be finding possible sell-off. So in this area now, this is a key area for us on daily. We are nearly there, 86 pips more. So this area here, this structure here is where we want to make informed decision. If we find rejection in this area, then we want to take a sell-off, right? Which is going to be a significant sell-off in the meantime. From here to here, 427 pips, and this is the trade. This particular trade there is a good trade setting up right now, and all we are waiting for is possible rejection. So out of some of the trade that we've been looking at, Aussie and the dollar yen are few trades that we'll be paying attention to because we are nearing an important structure as moving up. All right, so let's carry on looking at this. And that's one thing I like when I start to see things moving closer to daily level is getting much more important. So, and this straightforward, you'll be seeing the hierarchy of your own trade when you start to understand the structure at the back of the market. So we're looking at that eye to that particular eye as well. And you can see the kind of funny triangle in which it's moving. So I will go down to 4 hour now. And on my 4 hour chart, I will try and realign things properly. All I need is the first 2 points. So if I'm choosing this point literally, yeah, what I'll be thinking of is price has already broken from that low, yeah, to that point. Okay, price has already broken this point, right? There's a what's it called? There's an impulsive move down below that point, and then now we are seeing correction. And you can see clearly on the 4 hour that it's definitely an impulsive move down through my face. So the first point, that's fine, no problem. Take your time. Is thank you so much, Buki. Appreciate all you've done for the group, man. So impulsive move down now. We are seeing that correction, impulsive move down again. And then we tend to see correction that's supposed to give us continuation. It fails, a little bit of impulsive move up, correction, but we look at it more deeply on the 4 hour, on the lower time frame chart. Then we can see where they are hiding. Okay, and we have a 1 hour chart going forward. So impulsive move down, that correction. So this is moving in a channel. Okay, and the last action that occur in this particular channel is you see some kind of reversal pattern. Okay, after this impulsive correction, continuation, correction, continuation, then we form a three-drive pattern. Then we break out. So clearly a reversal pattern. After the breakout, that retest is happening. Okay, so now we are pointing strongly, pushing strongly to see most probably if we can see the eye touch. Okay, so we break out of this impulsive move, out of this correctional pattern. You can see clearly, and then we break out. Okay, but our breaking out to lead us into a consolidation channel. All right, and that consolidation channel is the channel that we are following closely now. And obviously, the push up higher to all this level will be giving us that particular short trade that we are looking for. But we broke out of this big daily trend line. Right, so it forms, Bishop is alerting me to, it forms an inverted head and shoulder. If you see it that way as well, yeah, it is right, and it's a reversal pattern, you know, and that reversal pattern is what we are following closely. And the best way to follow it now is to look at it as graduating up higher. And that reversal pattern over there is a serious reversal pattern. It's head and shoulder, and it drive itself in a three drive manner as well. So the more this continue to push inside this rectangle, sorry, inside this triangle, the deeper up we can go. So this is what we're going to be watching out for. We're going to be watching out for how this continue to progress itself all the way. Funnily enough, we've got three different touches on that hourly time frame. Right there, right there, right there. So we have a serious barrier. Are we gonna now find ourselves in a way whereby this correction, I'm anticipating possible break of this area to the upside. You know, that's what I'm anticipating. I see that on the daily in a way, but yeah, weakness can set in at any point in time. You can see that sell off and that push up higher. So, but with that, at the back of that sell off, let's look at it this way. I like to remind you of that gold trade again. So we've seen them coming in. Now we can stick this at the back of our trade, which means we may find it harder to get up higher. And if we get up higher, a good thing for us, and we can be looking for that short at the back of this level. But at the back of this sell-off, that and all this rejection to make a new low, and then we continue to push higher, we might be looking for this 78.6 level. We might be looking for this 78.6 level. You might see a couple of patterns arriving, which are bearish pattern. Let me look at this. 1,404. So 39, a good one. Possible shark at 88.6. Right. At the same time, I'm looking at this. Right, that's not a pattern, or else if it's a shark, but a shark needs to go to at least 1.13. All right. So that one right there is not a valid harmonic pattern. So I'm not going to be bothering myself with that one for now. That would have been the low, or else if I'm looking at something like this. Eight, and then I'm looking at that, and then I'm saying to myself, possible 78.6. Take this one off. I have a trade I'm looking at over here anyway. All right. So a couple of sell opportunity, a shark pattern, and emerging Gatley is coming up, and then obviously I have my 78.6 coming up as well, just because we've broken that daily trend line. I have my 78.6 coming up in this area as well. Ultimately, I mean, more than anything else is if we start to encounter failure at 78.6, then I'm not going to be thinking of this daily anymore. I'll be thinking of I'm not going to be thinking of this area anymore. I'll be thinking of a sell opportunity that wants to come from this 78.6 to this level over here. So, ladies and gentlemen, I get that. I'll be looking at my stuff all above this area. Okay, and obviously my trade down to that low and down to this low. Those are the opportunities that I can see uh, in the Aussie dollar, and hopefully they go on well for us. I'm ready to call it a quit over here. We've done a very long hours today. I'm gonna try my best uh, to upload the video anytime from now and send it into the group. If you have any question, please do not hesitate to ask a question. My email address, and you should have it, and you can contact me on the group as well. So I wish us a profitable trading week in the new coming week. I will continue to monitor the development of those positions and then see how well we are getting on. I wish you good luck in all your endeavors, and thank you so much once again for joining me. And I will announce the next training or live trading opportunity that I'll be doing um, as the week progresses. And at the same time, I'll come up with some more updates on the other charts that I'll be looking at. It's just that right now I need to relax a little bit, chill, and then obviously get something to eat. And yeah, whatever I do later on, I'll post some recap on the group. But yeah, it's a long video already, so don't let us make it any more longer. And have a wonderful day, guys. I love you all. Yeah, no worries, man. It's cool. Let's keep it up. You know, this is what I do, so I can take as much possible time on it. Doesn't really, it doesn't itch me in a way. You know, I just love what I do. So I wish you the best of luck. But I mean, don't hesitate. I'm still gonna be available on the chat group, so you can send me any message that you feel like sending me. Like I said, if you feel like supporting what we do and you want this insight and trading to continue, don't hesitate to support us. Um, you will find what's it called? Let me see. Some means with which you can support us. You'll find it on the video as well. So don't hesitate. And yeah, whatever I'm seeing coming up at the same time as well. I love this Aussie trade. I will try my best to see what is coming up on it. I can see it greatly over here, that impulsive move correction, and we might be able to see continuation. Yeah, but let's just be on the lookout for it, and it will be good. It will be good. Oh wow, look at Edmond just joining in when I'm just calling it a day. You know, I might come back later on, depends. But this is the particular structure on that Aussie that I'm looking at. You know, and even if that structure does not, if there might be, if this is a fake out. Yeah, let's watch out for the Aussie. It might be giving us a very positive risk reward trade. You know, I think the action has already want to be on the way, but yeah, it will be good to see pushing to this structural area for us to look for that sell off, you know. So I haven't seen any changes at the all this level over here. So that's the last. If we're looking at lower lows and lower highs, I have not seen any much of any changes. I'll just be looking at this low, that particular high, you know, and then I look at that high as trend evolve. This is another low, you know. So I'm thinking most probably you might get that push up to this level and then look for that drop, you know, and that's what I'm thinking. But notwithstanding, we might get to this area and from the 0 to 1, 1 to 2, 2 to 3. Yeah, I think we can still push up a little bit higher. Let me quickly see this. Let's put a third eye view into it. Okay then. So you can see in this area 618 is hanging there. 38 to that 618 we generate a good descent sell off. So let's be a bit patient. We got the 1.272 sell off, you know, and we can still have that push up to that, and that push up can be a possible either completion of 2 to 3 or completion of 4 to 5. So as a matter of fact, because the retracement that we have over here is not such a deep retracement, it's a shallow retracement to around 38, and then we should be able to get a push up higher to 612, 618 rather, and that area right there is a key trade location to encounter a good descent sell-off. So it's all about checking the price and then waiting this key area over here. We want it to continue to hold. If price just trade down below it, if we trade down below this key area now, then we don't have anything to think about and to continue to anticipate that fall. Because number one, we've broken the trend line, right? Number two, now we are breaking the structural point at the bottom, possibly retest it, you know, and then continue to come all the way down. So, yeah, I'll keep an eye on it. I'll do the same thing again tomorrow. And then hopefully we have a very wonderful trading week and and enjoy the rest of the day. Thank you guys. Have a lovely day. Bye.